This is London with Bitcoin Spike. We are open and we are up and out on NVDA. We are up and out on Tesla. We're going to go through the details for the New York market open. Shout out to our VIP #1 trade group. We're excited about 2023, having some great success. And remember, this is London, former hedge fund owner, private, non-SEC, not financial advice. This is not for purposes of trading. This is only for purposes of guys, just technical analysis, going to be looking at the framework for tactical deployment into the market to take a look at what we can apply into the specific, let's just say into the specific foray for day trading. Now, in terms of NVIDIA, that has the screen right now. I will take a look at Tesla here in 2 seconds. Now, I brought these moves yesterday to the VIP. We were in a bull flag on Tesla. Very nice to see the bull flag on Tesla playing out very well on open. And we can look at the levels that we are engaging in along with those upside targets. We had this bottoming formation. Yesterday was a great move. What a great move. We caught bottoms in terms of NVIDIA and Tesla on our fire and ice on the weekly and daily, respectively, I believe. But really nice to see, for instance, the specific amplitude move up 5% right now from the levels of engagement. Very important to see just how well these issues are doing. Very nicely done. Congratulations to all of our VIP. Now, we have a screen that is 8 wide. I'm going to try and find the specific alternative. If I go and have NVIDIA, I've set up templates here, so I have 8 wide Tesla. If I choose to look at Tesla, let's take a look at this Tesla layout as such, and you will see that we have designated lines where we expect interaction, such as on the monthly level. Pick up 20 moving average here, okay, on Tesla, 20 moving average, that central line of the Bollinger Band. Hope you're all doing well this morning. Nice to see some action to the upside. In terms of the specifics on NVIDIA, but just to explain again the layout here, we have 8 time frames across. It may look a bit guys, like a bit too much information. I'm going to encourage you to at least create one screen with multiple time frames to the extent that you have multiple specific assets that you're considering looking at. You know that we focus on Bitcoin, and the majority of what we are interested in with equities is really pattern recognition. Okay, it's really how much can we take from the equity market and apply it to our crypto trading, because Bitcoin for us in terms of volatility can and is really #1. Once she gets going, she lays waste to the market. So we really focus on Bitcoin, and equities are we really got involved in looking at equities as Bitcoin is currently, taking a look at Bitcoin currently, right in on that 20 moving average again on the monthly, a key level of consideration. Arguably, this will be a primary level of consideration, either up and over the 20 moving average will be a bullish consideration, or down and under the 20 moving average on the monthly will be a bearish consideration. Let's dig in and look at what Tesla and NVIDIA are doing, okay, in terms of the specifics. We had a bottoming formation. If we want to call this an irregular cup and handle, this is on NVIDIA. Let's take a look real quickly. And I want to shout out to the VIP. Nice to see some interaction in the back, without a doubt. And just taking a look, I'll remind you as well, when we see bull across the screen like this, or we see an interruption of a bear designation here on this time frame, what this is telling you is the following. It's telling you that the momentum on said time frames is either up, or the momentum on said time frame is rather down. So when we're looking at Tesla and discussing Tesla, we're seeing the momentum literally below here. You'll just see the momentum line is up. It is rising, okay? That would be on your 3-minute, on your 5-minute, on your 15-minute, on your hourly, on your 4-hourly, on your daily and weekly, and your monthly. Now, before the close yesterday, I let VIP know that we were in a bull flag on Tesla. That was the bottom line. I said bulls will reinforce that bull flag on open, without a doubt. If you are a bull and reinforced that specific pattern, boom, to the upside. Nice trade, great open. Is your day over? Well, it certainly is a nice start to it. I think we would agree. You see that expanding volatility on the 3-minute? You see, we like to be a part of this support resistance, up and out. That level, the specific I'd say this specifically designated pattern framework is something that we look for frequently. You know that we look for that very, very frequently. That's something that we want, is expanding volatility to the downside. So that means value driven. We want expanding volatility and a value driven capacity with the maximized probabilities heading to the upside. In terms of the framework, okay, on NVIDIA, looking at this cup and handle feature, bottoming feature, we're looking at pushing in up and past that 618 right now. In terms of that upside target, we've actually hit into that 786 when we are, or as we are designating our targets, okay, from the lines. We can designate them if we choose on the candle wicks. Probably be a little bit more aggressive here, but looking at that framework, we are always prepared to operate at the 50%, okay, the 50% completion, meaning that is going to be the max probability. What do we do on breakouts? On breakouts, so that you know, while the rest of the world is only looking up, yes, while they're only looking up, we are always prepared to re-enter on preceding level of resistance, flip to support. This move yesterday, and these were moves we caught all through yesterday. I was busy on the road, took some time off while busy to make sure that you all had entries like this. 3% to the upside, nicely done. Bitcoin really had a nice rebound yesterday, didn't she? She really performed well to the upside. You'll see a little bit of a momentum issue on the 3-minute, trying to roll back around here on the momentum for Bitcoin. Looking at the 5-minute, 15-minute, we have a bit of a mixed bag in terms of what we're looking at, a mixed data set as we're looking at the challenge for Bitcoin at that specific hourly 20 moving average. Engagement on our cap line, RSI, stochastic, and MACD. Boom. Nice to see the trade action. And what did we recover up into yesterday? Bitcoin. First of all, let's go into the smaller time frame that we were focused on Bitcoin. It was really a nice move if you were to consider the failure of this specific pattern, that volatility we're always looking for. Be prepared for a heavy fallout. Also be prepared for a potential nice trajectory up and back and meeting the participants at least at that initial demand equation between the sellers and the buyers. Beware of any micro patterning. Always filter into and try and find any macro pattern, okay, and be prepared for returns to said macro pattern of volatility or larger framework of volatility. Okay, in terms of the week, we are coming to a close. That's nice. I know you guys have been trading the lights out. I know you have. It's nice to know that, and it's nice to be a part of that in 2023. Let me get into the chats, make sure that everyone, that I don't have any severe microphone issues or anything else going on. Hope you guys are ready for a good weekend, and it's just nice to see the market and some of this volatility, without a doubt. Let's see what we got. And new timeout links. I could put people in timeout, it's telling me. That's great. People can go get it, you put in timeout, no problem. And I'll say good morning, Venus. Very, very nice to see you this morning. And boom, I like the target and the bam. Very nice. That lets me know you're on your desktop computer. Nicely done. You've got that streaming, very nice. In terms of the visuals here, let's pick up on some key interactive levels today as we look at the bulls. In terms of the framework here, just nice, all we can say to start with is nice completion to the upside of the bull flag in play, sure. If we were to measure precedingly, okay, and this is on Tesla, the specific amplitude carry up, you got it. Have we met the target nearly within about, what would you say, about 90% to the upside? Do we have additional upside targets? Sure, on that bottoming formation, we do have pushing in and past that specific golden pocket area, and the market is evaluating a potential for a throwback, of course, to the preceding level of resistance. Those probabilities seem difficult, don't they? When you're looking at something that's like, well, it's got a 62% probability. We know 62% generally is something that is not favorable. We prefer the 75 to 85%, potentially plus, in terms of the probability factor. So right now, looking at a challenge indeed for operation up and over the specific rising wedge. You may have been a bull yesterday and said, fine, I'm going to roll into this specific flag slash bell pattern formation. I'm going to hit into it. I'll carry it overnight. I think the bulls have got it. Remember that let's say this, and if you did such, you're in a different position now, aren't you? You woke up with a different position. You got paid immediately on market open, literally 10-second trade, exit over and out, nicely done. But the issue now is, as you're looking at any kind of a flash trade, you're looking at being up and over the top side resistance of a rising wedge. Not my favorite place to be. You know this. I would prefer at this point, me personally, in terms of the pattern construction would be through the preceding left. I'd really, guys, like to see some sort of and I don't want to talk it down. Let me say that. I do not want to talk down the price. Okay, so please understand this is not for you to trade off of immediately. We are 8 to 10 seconds behind on YouTube. So, and I don't want to talk down the price while we're having a great day on NVIDIA and a great start on NVIDIA and Tesla. But ideally, what I'd really like to see, and we have some complications in terms of achieving what I'd really ideally like to see, would be this left shoulder, this head, and then a real nice bullish right shoulder here after a contact at that preceding level. That might give us a really nice trade for next week, like a really nice one. I'm always looking, and you guys know we're always looking for just some nice price action. We had some, as we look at NVIDIA yesterday, we had some real. Let's do this. Hold on one second. Let me make sure that we are on with Tesla, NVIDIA, Tesla. So I've got one screen here that's Tesla, that's flipping in between Tesla and NVIDIA. Noted. Okay, and the one I use the most, the 5-minute, has been flipped with Tesla and NVIDIA, which is difficult if you're going back and forth. The Tesla had the perfect bull flag last night, right? That had the one to really schedule into. And the question is going to be on Tesla versus NVIDIA. Do we have that rising wedge feature on Tesla that we have on NVIDIA? Okay, let's put that framework clearly in the mix. Do we have the rising wedge feature? Okay, in terms of this bottoming structure and the breakout, which I've also delineated here or lined out as on Tesla, the specific broadening bottom formation based upon this pivot here to the left. It's a bit of a difficult call. Please pay attention to this. Anytime that you have a curl in feature pivot, okay, on Tesla, this is on the specific 5-minute time frame, a curl in feature here, boom. And by the way, what did we hit? We hit a target. Bam, bam, hit. Nicely done. You know, we had that expression of a divergence between the level of support, guys, level of resistance, that demand agreement on a pattern expectation, which should have been to the upside, pattern expectation to price line divergence. This, guys, was not a target hit. This was a target hit. Very nicely done. You'll remember this specific zone herein. You'll remember this zone and a strong pour down, a strong divergence that was created in the market on Tesla. You recall that. We looked at momentum thereafter significantly more in focus. Let's just say we were significantly more in focus after it just really misbehaved on volume. I just have to say that. Real bad operation here in terms of a volume consideration. It just required a stop loss, or the bears, guys, were very happy. The bears, the shorts, were very happy on this move. Again, you can look at a move like this. What do we need if we're ever trying to get back up within a pattern or over and out to the top of a bullish pattern? We need momentum, sure. If that's a target of ours, that top side resistance, we like to say if we have a target, we want a pattern to get to our target. So looking at the framework of that difficult move that we saw that day, just remember, okay, remind yourselves, we want a target and we want a pattern to get to our target. So looking in the framework of this descending wedge here on Tesla, again, back to the reference question, it's going to be, and as much as I'm not crazy about, let's look at this in terms of the rising wedge question. Are we really, are we pushing on Tesla the same way that we are on NVIDIA? NVIDIA, recall this morning, is looking, let's get into NVIDIA here. Let's get into NVIDIA in terms of that move to the upside, and let's mark out that rising wedge feature, which is of concern immediately. It can be a stall out zone. You guys know it can be a stall out zone. It can be, and this is a nice look at that 3-minute. These were the essentially, as I can best recall, and I was on mobile yesterday, just to let you know, I was on mobile with a different set of charts, bringing you the targets and bringing you those pattern trades that traded very well. We noticed some differentials yesterday, definitely on NVIDIA. Was it NVIDIA? I believe also on Tesla, kind of a dual level, multi-tiered, I'd say, differential in terms of your targets to the upside. Without a doubt, it was going on. So we had that in the mix. And let's take a look at Tesla and check in with Bitcoin real quickly. How is Bitcoin doing on that hourly 20 moving average engaged short? Nicely done right into our cap line. Our cap line on the hourly has paid 0.35%. Nicely done within this hour there on Bitcoin. Nice to see such as you're riding again on that 20 moving average on Bitcoin on that monthly time frame. Very, very, very important. Now, what happened yesterday on the market open? The bulls and the bears were on a standoff. Essentially, you cannot call it any differently than such. I think you know this. The bulls and the bears, we were tucked on NVDA and Tesla, and this is relevant to our trading on Bitcoin. I'll just tell you because the key focals of the weekly and monthly 20 moving averages were directly in play, right? Without a doubt, we're directly in play. You see right now on the weekly, you're seeing on Tesla, okay? On Tesla, you're seeing that 20 moving average being forced. Absolutely. So the bulls are holding this line. Where did we engage on that weekly? The lower pro line. Beautifully well done, right? Beautifully well done. Looking at that bottom side hit of the band after the cross under, boom, we got that full completion hit on the daily on Tesla. Nicely done. In terms of that move to the upside, you see that we're going to be coming into contact here closely with a capital control line here. Capital control line in red and that specific 20 moving average on the daily time frame. Want to shout out to what do we got going on here? Let's go. Partially close your NVIDIA short at 420 and took a small long position. Hey, good job. Scotland in the house. Very, very nice. Let me see. I need to turn up the brightness of my cell phone. There we go. Now we're rocking and rolling, cooking with gas. Now, the critical framework that we were in, just so that you understand, we were, and let's, for instance, take a look at, this was where we were at. And I'm going to tell you guys, it was a bittersweet moment in terms of the bulls versus the bears. This is a story as it is told now, period. Okay, looking at, and just for now, looking at that engagement on the weekly, you heard multiple times me say the green buy line on the weekly. Did we have lower orders? We did. We really had lower orders that we wanted to see picked up in this zone. True, you got it. Now, as we were operating underneath, and this will go ahead, and I think it's fine for us to put this in the context of the bulls versus the bears, essentially trying to reinforce shorts, trying to do what? There's a lot of bears out there. You guys know this. There's a lot of people trying to reinforce this line. Okay, that 20 moving average or anything else they can hold on to on a video or anything else, trying to down talk everything, get their short of the year. I'm going to say the only problem with that, the only real problem with that is what? Are we low? Not technically, right? If we're on a green buy line on the weekly, technically we're not, or let's say this, are we high? Pardon me, it even sounds funny when I say it now. Is the price action, let me say that, maybe a reason I don't want to just say that right off the cuff, maybe a bit of a faux pas on my behalf. If you look at the price, is it relatively low or relatively high? And this is a great discussion because I say this all the time and it can be misinterpreted. Okay, not to the extent that it just sounded odd or off the cuff, a bit coy on a Friday here in the market. But pay attention to this. When I say you want to buy low, right? There's always a degree of relativity. Sure, I mean there's always a degree of not subjectivity, but there's going to be relativity in terms of an actual. Let's do this, for instance, on the weekly. You see the weekly, okay? We're on a green buy line, bottom line, to start the discussion. 5.7% from our activated specific fire and ice line. Let's take it over to the 15 minute. Let's look at the 15 minute. Now, on the 15 minute, are you high or are you low? On the 15 minute, is this portion high or low? It's low, right? On the 15 minutes. So that degree of perspective and that's the range, nearly the range entirety. Yeah, it is the range entirety over the preceding number of, the preceding number of, what is this? How many days is this? How many days are we into it? Don't tell me that's 127 days already. Is that 127 days? 125 days, guys. So as you're looking at the framework here, as we start to assess, well, buy low. Okay. There is a level of perspective, right, that's brought into the equation and be like, well, I know that, but really low is down here, right, on the weekly. So as we get into some of these variable lines, allow this to just reinforce the notion that comparatively speaking on the weekly, if we're on a green buy line, that is a designation. That is a signal literally to you, but that's a strong indication that we're at a calculative level where bulls are going to try to at least reinforce what they would consider to be, particularly on a higher time frame, a lower entry relative, and is calculated to such as within the parameters of preceding number of weeks on this time frame, preceding number of weeks, giving them a calculative. It's going to be a kernel calculative. It's a highly calculative entry, but it designates a specific calculative target. That's it, and it is low. Okay, so with that said, it's not, we had lower targets. The beauty of Fire and Ice is to the extent that we always have a fire sale line. It will do wonders for you, Fire and Ice, that it will prepare you in terms of your exposure on the asset. You all know this. So looking at the, without talking about whether or not we are low or we are high, etc. Understand the differentials, understand the components that you'll look at, and don't get caught up. It's a good thing to say this morning. I hope you're doing well. Looking forward to a good weekend, right? Don't get so caught up in the lower time frames where you lose that perspective, right? Don't let that happen. You can certainly be so zoomed in on those micro time frames you could just completely lose your perspective. So that's an important feature as we watch. Let's just see where we're at. It's nice to see this 2.2, 2.4. A lot of people talking bearishly, right? Look at this support line pickup that ultimately we got on the 4 hourly. Now the important thing here is what? What do you see on the 4 hourly that we speak about all the time? What do you see on the 4 hourly that's quite impressively demonstrating itself within and of itself, that you would look at and say, okay, on this 4 hourly, what do I see that I want to pay attention to and be a part of in the future? What is something that we have continually just racked out in terms of the forceful, guys, just the force and effect and how positively these have been behaving. Generally, you're seeing a nice feature of a long on your capital control line. We can't really, you can slice it and dice it. You can say a lot of different, guys, we can come through a lot of different angles on this. That is strong. That's nice. That's beautiful. That is VIP. That is going to make up for any kind of, who knows what's going to happen on a Friday or on a weekend. Don't get wild and crazy this weekend. I want you guys taking care of yourself. It's important to me, guys, to me, that you all take care of yourself. VIP is the place to be, and just take care of yourself. Take care of your family, your friends, all that good stuff. Enjoy the markets, enjoy your profits in the markets, and understand it doesn't come without a degree of surprise. Now, what would we like on this specific blue cap line? We'd love a return to it, wouldn't we? We got close within threshold, but really that cap line came up and met us at that preceding level. So we have a bit of differentiated, one differentiated bar, which makes this look closer. We really would have liked to have gotten down to that cap line, which was reinforced and then triggered and turned with this move. So this would have been a nice test on that specific move, confluent with the higher time frames. And remember, the bittersweet component was at the weekly on NVDA. You guys remember that. And it was just like, do I want this to go down and pick up the specific preceding levels of support? Do I want to get down here? And you'll recall, it's like, yeah, but we're sitting on our buy line. So that's just phenomenal to see, and to be able to bring that on potentially the key asset of the year, right? Just bottom line, potentially the key asset of the year. I always say, let the indicators speak for themselves. Okay, nice push up. I hope that this is some degree of a carry trade. If you consider yourself to be a bull, that's it. If you consider yourself to be a bull, I hope that's some sort of a carry trade. I can't turn a bear into a bull or a bull into a bear. I have tried and it does not work. Okay, so if you're a bull, I hope that line reinforced with some degree of guys, certainty or just, who knows, good measure. It's a nice hit. In terms of the move to the upside, let's measure NVIDIA real quickly. Let's take a look, and shout out to all of our VIP. Good morning. Nice open, that bull flag and the bell. Again, what rocked on NVIDIA? What was it? On NVIDIA, you got it. That specific bell pattern formation just rocked boom, to the upside. We hunt these, we look for these. Any of you traders who are looking at this pattern, what do we apply it to all the time? The reason we look at equities, we apply it to Bitcoin. That's what we do. We assess equities. We take a look at them, see if there's anything we can learn and apply for correlative purposes or otherwise to our specific crypto trades. That's what we are doing. So in terms of the details, let's take a look again. While Bitcoin has expressed on a few different time frames, I'll try and clean this up. You'll see that bearish or bullish indication, looking like we're bearish on many time frames in terms of that momentum. We'll be needing to turn that around for Bitcoin without a doubt. But you're seeing that 5-minute rolling over. You're seeing the 15-minute, right? Trying to gain some steam and roll to the upside. A little bit of a refalter there. You're seeing the hourly, right, with a big cause of concern here recently with just a relatively consistent drawdown on that specific hourly momentum. You're seeing the specific 4-hourly. Let's take a look at that 4-hourly. 4-hourly has been strong to the upside and is beginning to taper off. We pay attention to that, don't we? Without a doubt, we pay attention to that tapering, leveling or plateauing out as very, very highly important, right? And what we're seeing there also is right now that in line with the specific tapering off, we're seeing that cap line, capital control line, that blue line, get reinforced as a level of resistance in concert with guys who are in confluence with that specific tapering off. That's a warning sign. If and when we open this next candle to the right, it's going to be red. The cap line is going to be red, okay? It's part of the function of the cap line. Are you up and over or are you down and under, okay? Setting down and under is going to establish this as a red feature. So in terms of that momentum, that RSI, stochastic, and MACD, very important. Looking at the 8-hourly has been a strong momentum play. 8-hourly carried you up for this move here recently. Okay, that was a big move. As you look at the 8-hourly, just keep an eye on the 8-hourly. So it has not tapered off yet. That 4-hourly may be a precursor towards that taper, though we have a bit of variability here in terms of preceding kind of back testing the features here. You'll just note, and you can back test and assess the degree to which traders are surprised or continually rewarded with this specific 4-hourly structure in play, in terms of that structure being that MACD momentum that we look at, right? Let's see, that 8-hourly looks very nice, doesn't it? In terms of the daily, we'll take a look at the daily, and really the surprise of everything was that daily flipped back up to the upside on Bitcoin for that momentum push, boom, to the upside. That was a big surprise for the market, wasn't it? As you were looking at the daily, it was a reason to stay short. You had to bootstrap from your lower time frames to say, no, I'm going to be going back to the upside, and let this be the coattail, the larger time frame be that coattail to ride on those lower time frames, right? Without a doubt, very interestingly situated. That does occur. And that's the magic of the process. If you guys can get into that, it's like, okay, when does the larger time frame operate in terms of, let's say, it will, I mean, to ride the coattail of the lower time frames? That's the crux. When is the larger time frame going to operate as the lead, right? In terms of it's going to drag the rest of the smaller time frames with it, or when is it going to just operate again as kind of the right on the coattails of those lower time frames? That is the crux of the market. If you just understood what I said, that is it. Yeah, you're constantly trying to assess that, and we're very good at doing that. Typically, we're very good at doing that and processing that in a way visually, much more so than we are than we are calculatively. It's not easy to calculate such the impression of cross time frame dynamics that you visually get. I think you'll agree with that. You'll visually have an understanding of how consistent or how reliable a specific time frame is in terms of the back testing. You will immediately have a great impression in terms of how reliable something truly is. Whereas calculatively, that can be difficult to replace, okay? Your own ability to just judge into and essentially evaluate multiple time frames, multiple kind of back testing levels of either confluence, divergence, or just overall reliability or lack thereof. It's a mouthful, but I think you understand very well the challenge that we have as we calculatively and technically look at the markets, though calculatively, again, we've had some very strong approaches to the market. Looking at that specific hourly, it's just rocking and rolling. Way to go, way to trade. This is the bull's day. Looking at the golden short level engaging, nicely done. Let's revisit also on the daily, and this is going to be a weekly lower pro line hit, isn't it, on Tesla. Remember that we were really, and I think I can bring this up on a side screen. Let me see if on Tesla I can bring this up so that we can evaluate this very quickly. Let me see if I can. Where is my, here we go. Let me try and bring this up very quickly. I'm going to get rid of some screens if you don't mind. Hope you're doing well. I know you have your own technical information up as well. Let's take a look at the specifics, and that is our blackjack pattern identifier. Here we go on NVIDIA. Nice to see. These are blackjack moves. Let's take a look at, let's take a look at Bitcoin. Let's take a look at rather Tesla. I want to lay Tesla out if I can. Nice gap up on the open, right? Very nicely done. I'm going to see if I can get into the specific, and I may have to do some additional resetting here. I don't want to have to do that. Let me see if I can actually bring up the weekly. Let me go to the 4 hourly and see if this is going to reinforce where we're at. Note the 20 moving average on that. The 20 moving average on the 4 hourly rather is incoming. That 20 moving average is incoming. Let me take a look at it and see why I don't have, if you'll give me just 2 seconds, the monthly versus the weekly. I may have to just do it here. Let's do it here on this multi-frame chart. In terms of the weekly and the monthly, as we're looking at coming in contact with the daily, this is your crux. This is what's going on with Tesla right now. Let's pay attention to this, okay? This is a big deal. Take a look at the bottom of your screen. Let me do this for you so that you can evaluate this a little bit better in terms of Tesla and appreciate where we were, the opportunity for the bulls and the bears this week, and who is leading the pack right now. Pay attention on the daily right now, and I'm bringing up the daily because on Tesla we have the incoming level of resistance. That's the next critical level. Along with that, and we're going to pull this over for 1 second, along with that 4 hourly, which is engaging immediately, nearly immediately on the 20 moving average. So this is the domino, the sequence of dominoes here in terms of and also that tug of war where we've been in on Tesla. Understand the dynamics in play. Very important that you would pay attention right now. Okay, very important. As you would look at what we had in terms of an assessment, in terms of this battle that was going on this week. Now, I know bears who traded short. Are they stopped out? Potentially, depending upon how close their stops are. I know some guys that are going to be bearish for the next number of weeks, period, guys and gals. It doesn't matter. They're still bearish. They're still hunting for this short, the next level of interaction up. This is going to be on the 4 hourly. They're engaging shorts here, guys. I know traders who are engaging, literally going to be at that next level going to engage shorts. Literally at the daily, that next line incoming here. Then there's, I mean, guys, they're going to be looking at the next line of engagement on the weekly. And then they're going to be looking at any additional lines that may surface at lower time frames or higher there, let's say at the monthly. But where we were at, and pay attention to this. Pay attention to this. That ghost is funny, but pay attention as you were to look at this, where we were on Tesla, okay? And appreciate this for what it is, because this was a good week. It was a good week to make you choose your side, okay? Period. And I just tell you, if you're a bull or are you a bear, is this going to, the thing that just hits back at me, what's the one thing that hits back at me and can hit back at you in terms of the week, the progression of the week? What stands out as the number one literal identifying technical feature and fact which we cannot get around? What is the one technical feature and identifying fact and instance that we cannot get around and that the bears failed? What's the one thing, guys? On the descending triangle, on the NASDAQ, what happened? The 23.6 engaged, and that was it, period. True, absolute fact. Then what happened after that? The 23.6 engaged. Let's look at this. This is the most important fact of the market, okay, right now as we were to assess this. If we were to look at Let me go ahead and take some of this off the screen here so we can identify this. And we'll have to look back on the time frame, et cetera. I believe 4 hourly. We'll look back at it. But as we were to look at this, this is the market this week, period. In the context of Tesla, I want you to understand what's the most important factor that occurred this week. Yes. So what's going on? What happened? This happened. We broke down on the NASDAQ. Boom. Into, and we'll have to find exactly let me actually find exactly what was it on the daily? I believe so. It was on the daily chart, wasn't it? I'll look back at the chart that I gave you guys beforehand, before the hit and on the hit. It was the exact, and you guys will confirm in the back it was the daily. Confirmed, okay? Looking at this this framework, boom, and this was the exact chart I gave you, got hit. Quick draw on the 4 hourly, won't do it. Bigger time frames, we like them for purposes of charting. Take a look at what occurred. Now this, and then down to the differentiation of time frame, down to the differentiation of the candle wicks versus you guys got it. This is easy stuff. No, a lot of differentiation, a lot of potential for mistakes. True, but as you look at this, we had the right chart in the back. We nailed the 23.6. True, fact, right? So as we look at this, what happened? Bam. Who engaged? Bulls. Who didn't give up? Bulls. Who recovered the pattern? Bulls. Who are looking great now? Bulls. Now, pay attention. 23.6 engaged, step one. Step two, most critical portion of the week was what? So this is the most critical portion of the week, period, on the NASDAQ. As we've looked at the NASDAQ for, guys, years, really looking at it for correlative purposes, for Bitcoin, etc. Now we're looking for some more correlation with Bitcoin, but Bitcoin's been volatile, has been nicely volatile. The point here is the following. The most important pickup over this last week was this. If you're a bull, you're engaging, boom, on the 23.6. If you're a bull, you're not shorting here. Now what are the bears doing? Well, the bears are shorting here. So step one, bulls pick up at the 23.6. Step two, bulls, okay, beat the bears at the specific, and those micro patterns come into play, but beat the bears at the level of engagement of the shorts, and bam, we're back up into filling an upside gap. So just understand the dynamics. The most important thing this week was this, bam, 23.6, level of engagement. It's why we have multiple levels, right? To the extent that step one, 23.6, step two, beating preceding flat bottom support that could flip to resistance. I mean, shorts are parked here. So bulls did the trick once and twice here. That's the story of the week. And in the context of Tesla, just in the context of Tesla, understand you had this same battle. Understand what was the dynamics of technically what was being fought. What was the fight? Well, bulls were here, pushed up through here. You got it. Bears entered here on breakdown. You guys got it. Bears, I'm telling you, where do you want to short? Higher. Where do you want to long? Lower for bulls, right? So again, case in point, do we breakout trade? We really, really, really don't like to, and I really recommend that you consistently not do it. How many bears just got their lunch eaten? I've been saying it would be interesting to see that occur all week, but this is the bottom line. Your 23.6 level of engagement, along with your fire and ice, forget the fire and ice, just go, and that was perfect, guys. That perfectly worked out. True, amazing. Very, very appreciative of anyone and everyone who had any role to play in that, okay, in terms of that reinforcement of that critical line on NVIDIA, on Tesla, on those lines. For bulls, they played the green weekly buy line. Green buy line, weekly, bam, in the money. Nicely done. Now, it caught the bottom of Bitcoin. True, green buy line, daily. Okay, is it an all-in situation? No, never is. It's not built to be. I didn't build it as an all-in indicator. We didn't want an all-in indicator. You guys know that. I didn't want one. I did not want one. We haven't built one. I may not build one, right? Looking at the specifics here. It's a measure of degree, guys. Looking at this, looking at the 23.6 engagement, back up and through, let's just appreciate that this same dynamic went on where? It went on with Tesla, okay? That battle here between the bulls on the 23.6, between the bears trying to reinforce this preceding level of support on a descending triangle, the bears just got wasted. I'm telling, and you guys know this, but there's a lot of there are a lot of guys that are just hurting. Understand, on Tesla it's the same thing. We had the opportunity to hit into, we had our lower pro line on the weekly. True? Yeah. Played perfectly. Pro, boom. Now, you had to charge just like you had to charge on the NASDAQ, boom, 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 back up through a level. What was your level on Tesla? Yes, indeed. It was that 20 moving average on the weekly. We had discussed, and you heard, that Tesla on the weekly, and we just can say this as a fact to remind ourselves of what we discussed, has pushed this line frequently. This has been a level of contention and has not been a clear-cut, highly precise line in the past. True? True. To the extent that we had a reinforcement direct nearly, guys, nearly perfectly on the 20 moving average on the monthly. This is the bull turf right here. This is the bull stand here for the week in terms of their level of engagement. So we had that ability even on Tesla to say, well, if the bears want it, this is just where it becomes important. If the bears wanted it, you were below the 20 moving average, bears. You could have pushed this down. You didn't. The same thing as the NASDAQ on a descending triangle, you can't push it down. Fact. Now, is it game over, sayonara, that's it? No, but you got a lot of bulls sitting pretty on the NASDAQ. 23.6 level of engagement, boom. I decided to enter. I'm a bull. I have a level of interest at the 23.6. You guys have the chart in the back, and bam, perfect. It was a perfect hit on our chart. Yes, at the 23.6. Now, the point is, the bears were pushing down. Get it? Capiche? We got it. The bears here on Tesla were pushing down. So the bears just got really laid waste too. In terms of the opportunity to have a level of resistance to power down below, level of support to power in up and above. I'm going to tell you, you're going to look at, and you know this, but please listen. I think you know this. If you are a bear, you are going to find every single excuse in the book that you can technically look at to wrap your neck short around. I'm telling you, I could sit here and talk about bull this, bull that, bull everything. And you're going to listen to 5% of it. I might get you with the 5%. But if you're a bull, guys, if you're a bull, you're not going to listen to anything bearish I have to say. It is a dynamic. I continually see it. You see it as well. And you know it as well. So we can only talk technically to someone who's just bearishly, designed. It's difficult, you know. And so put yourself in the place where you can try and understand that maybe your analysis is going to be continually slanted in one direction. If you're neither on the right or left side of the fence, and you find yourself kicking the soccer ball to both goals just indiscriminately, and you don't know, and you're not figuring out, and you're I'm telling you guys, if you find yourself in that position, you need some sort of a guiding principle. Find your time frame, find your indicator that's working well. Fire and ice is nice. It has a level of differentiation in it, but find yourself making some consistent trades on a time frame that makes sense for you. Something where you see a level of consistency with your capital control line. Find it, enforce it, trust something. If it's a 20 moving average trade here, begin to engage tactically somewhere, directionally, repeatedly with a tactical front end. Make sure that the technicals, and this is if you find yourself and you can't figure out bull or bear, you may be a born hedge trader. Maybe. It's possible that you're born into this to hedge. Period. It's possible. Maybe you're supposed to have a long and a short. Maybe that's your future. It is possible. But to the extent that you find yourself just aimlessly, misdirecting each and every trade in the wrong direction, force yourself to engage in tactical deployment of your trades short, consistently underneath a 20 moving average. Hit 10 of these, okay? On a level of support coming from above, force yourself to engage. And guys, we trade Bitcoin. Force yourself to engage, okay? Tactically, either at or towards a specific moving average. I mean, force yourself on the 4-hourly to tactically engage on the 20 moving average, or force yourself on, and I know we didn't get this hit, very close, Bitcoin we're watching, but force yourself to tactically engage at the 4-hour lower pro line or the upper pro line. So I would recommend you start with like a 20 moving average just to force yourself tactically to stop going in both directions all the time. Employ a stop loss. But you're going to find as you trade more and more, and you guys are already there, you know this. So we look at the, let's look at this framework here. Same thing we're discussing. Same exact thing we're discussing on Bitcoin. We just discussed this on the NASDAQ, true? You got it. Where are we at? Close. We hit into the 38.2. Would have been nice to get to that specific. Let me actually tighten this up just a touch. I think you'll agree with that particular placement. Let me get it exactly driven here. Yeah, we hit at the 38.2. Guaranteed to go to the 50? No. Variable construction? Not really. That's perfect. Huh? That's I don't always say that, but that's darn close to being perfect. Perfect targets. Yeah. We try and really proficiently draw these, highly technically speaking, etc. But we also quick draw. So 38.2, no problem. So as you're it looks like Fire and Ice is thinking. Let me see what it wants to rethink. Green byline on the hourly, and as you tactically approach the market, you're going to find something that the more experience that you have, the one thing I don't want you to do is to continually chop back and forth in the market. Don't chop back and forth in the market. Chop. Don't get sideways applying, and this is what will happen. If you aren't consistent in terms of, and you guys tell me if this is right or wrong. Okay, you tell me if this is actually occurring with your trading or not. If you have patterns in the market, you're going to find the technicals to reinforce them, okay? And you're going to have that same patterning within those technicals, as we see a little bit of an expansion here in terms of volatility. Anytime I don't have a perfect, specific perfect channel in the market, I'm interested in that. I know I've got some degree of an expansion ongoing, right? I don't like to shuffle these too far out. They become near channels, okay? But I am paying attention to anything like this, right? As I know I have what to the downside. What do I have to the downside on this? As you look at this chart, what do we have to the downside? Aside from a level of support pickup here, okay, which is the ideal place we want to go to. Let's say to the upside, what do we have? We know we have a topping formation, okay? Aside from that specific descending triangle framework, always catch these. Draw a straight line, boom, there at the pivot, okay? You know how to measure Fibonacci extensions top to bottom. Oh, I hit that every now and then. Let's see what we got. Let me hit into this Fibonacci extension. Bam, high to low, because we want, if we draw down, click 1, click 2. We draw down for targets down. Okay, what do we do for targets up? We draw up, click 1, click 2 for targets up, and they're up. So draw down, get targets down. You got it? Draw up, click 1, 2. From click 1 to click 2 on the extensions. Draw, if you want your targets down, draw and click down. If you want your targets up, draw and click up. Okay? Targets up, targets down. On the Fibonacci extensions, click 1, 2 is going to be down if you want downside targets. Click 1, click 2 on the Fibonacci extension is going to be up. Click 1, click 2 is up if you want targets to the upside. Click 1, 2 is up, and we have targets to the upside. Click 1, you got it. Click 1, 2 is down. We have targets to the downside, okay? It's how you measure your amplitude, carry, and your specific fractional completion. So we know we have what to the downside. You got it. It's there. Note it. Mark it. Look at our specific rising wedge feature. You got it. What do we know about a rising wedge? Typically, they're bearish. Generally, they're bearish, meaning what? Meaning we have a divergence from the expectation of pattern expectation to price line divergence. So we like to see this demand agreement between buyers on support, sellers on resistance, enforced through a specific either act as it should behave, move to the downside, or we like to see a reinforcement of that demand agreement of literally that apex, which literally is a calculable level in the market. Literally, it can be calculated down to the $26,615 and the number of cents. You know this. Literally, there's a calculable level that can literally be calculated aside from drawn, okay, between the buyers on support, sellers on resistance of literally $26,591.40 is the result of this demand agreement. That's on a quick draw basis, but you understand that it can literally be calculated. It's literally the result of a demand agreement, okay? An expression which should have gone to the downside. So that's going to be a target for us, and as is any wedge which fails. Now, we say two things. That's a target. What do you need to get to your target? We need, you got it, a pattern to get us to our target, right? So what's standing in the way? You got it. At that, and be nice to get that 50%. Come on, close. Maximum probability. Does that mean it's going to hit it? Come on, guys. Don't fuss too much. You're better than that. Let's take a look at Tesla. Tesla up 3%, laying waste to, and this would be the thing. Well, I thought it was bearish. I thought we were heading down. Well, let's take a look at it. We have some componentry in play here on Tesla, which was the broadening bottom formation. And to our credit, guys, to your credit, you can't establish a downside target unless you get out up and over it. True? I don't enjoy going along here. You will rarely find me going along here. You just won't. You won't find that. It's something that if you do it frequently enough, you'll find that it's a very, very trappy area, very tricky area to operate over any rising wedge. Generally, trade 100 of them. Let me know how it goes. I'll be preaching to the choir. I guarantee you. If not, you let me know what you think. So looking at this specific formation here, descending level of support, descending level of resistance, that broadening bottom is a nice pattern. We don't like bootstrapping in this hitch here, but it is there, particularly due to, let's look at this. What did we have in here? Recall that we had this specific volatility equation which recovered, and I know you all traded that. Nicely done. I know you all traded that. That was a nice return there on Tesla. Yes, up, out, and over that specific equation that we were hunting for. Now this chart may look like this, it's just dispensable. No problem. It wasn't, was it? Not at all. That gave you the specific return expectation, but boom, we have more of these, right? We have more of these in play right now. We'll have to dig back and see where they're at. You guys got it. But looking at that broadening bottom formation, we're not crazy about this hitch in that kind of a trade-off from resistance, bears on resistance, bulls on support, bears at resistance, bulls on support. We like to hammer in and count this as the first real handoff from the bears, boom, to the bulls. Then to the bears, then to the bulls. And then we like 2 hits on each specific line, support or resistance. True? True. Can we slide this over and say, okay, we have the broadening bottom formation. I'm going to go ahead and put these as dotted lines. I want that to be a conditional pattern right now. It's going to be considered in line with what? It's going to be considered in line with the double bottom formation. Sometimes you may need to invert the scale to take a look at what that bottoming formation would look at as a topping formation. Judge your bias. Don't start to rely on things upside down, but judge your bias. And what else do you start to see here from a topping? If this were a topping formation, just judge your bias, just so that you can see whether or not you're capable of viewing. Now you see, okay, that would be a return to. I see. A return to preceding level of support if we were inverted. I don't work on inverted scales too frequently, but what do we know on the breakout here? There we go. What do we know on the breakout here of this specific? If we were to look at this in terms of a bottoming formation, what do we immediately know? And you guys are applying this stuff all the time, but you're noticing the repetition. Yesterday came in huge. The repetition came in huge, without a doubt. What was it? I mean, it was the key entry from yesterday to today. Absolutely, absolute fact, right? As we were to look at the entry, we'll look at NVDA in 1 second. True? And let's look at it real quickly. This specific preceding, if we were to look at this, as you're seeing, here we go. There you go. It's that tango, huh? That death, that death. What would you say? The dangerously, guys, level of it's dangerous, isn't it? That tango that Tesla and NVIDIA want to do. True? Yes. Rising wedge. Boom. Difficult place to be involved. Yes. Now that's on NVIDIA. Yeah. People just going long, long, long. Okay. Well, it's difficult. It's difficult. You just never really want to find yourself just hammering into a long right here. Very rarely. Let's take a look at Tesla though, because what? We do have this same function. And again, that deadly tango, right, between Tesla and NVIDIA. And on one eye, she'll give you a left jab, and on the right one, she'll have someone from outside the ring, being NVIDIA, give you an uppercut, right? That's the Tesla NVIDIA tango, isn't it? Little bit. Heavyweight champ fights, and Tesla's going to give you a right jab. You're ready for those all day long, and someone from out of the stands is going to configure up with NVIDIA and give you an uppercut. Like, whoa, whoa, whoa. I'm fighting one guy in the ring. And there's something to be said for that example as well, right? Focus on one heavyweight. Focus on one heavyweight. Yeah? You like to trade multiple assets, no problem. The more you say, man, I'm in this. I'm going to fight everybody in town. Okay. You're going to fight everybody in town. Huh? Whoa, man. You don't have to fight everybody in town. You're good enough. Escucha, listen up. You're good enough. You don't have to fight everybody in town. You can pick your heavyweight bout. You can pick which asset you want to trade, and you can fight and prove you're the champ in the ring with one of these guys. Just one of these guys. True. You don't have to fight everybody in town. Well, who told you have to fight everybody in town? Yeah. Guys who fight everybody in town, they lose. You don't know that? They're working way too hard, first of all, and they lose. That's not the way to do it. You don't have to do it like that. Right? We want you to be a champ. You don't have to fight everybody in town. So pick your opponent here. Focus. And I know we focus on NVIDIA and Tesla because they're hot moving and they have that tango faction or feature to them. True? Yeah. Let's look at the specific low to high. Let's focus on this bottoming formation here. Let's focus on that specific first leg in, second leg in as a bottoming feature with the amplitude carry up with the breakout of the preceding pivot. This is a line of interest. Glad that we defined this early on, that resistance across the top, which is loaded with orders. True, yes. Let's pay attention to the following. As we were to look at the specific moves, we're a little bit more comfortable on the pattern dynamics of NVIDIA being that bearish rising wedge. Do you guys agree in terms of the conformance? A nice double touch into support. We have the handoff from the resistance, the mid-level return to that resistance hit for the handoff from bears to bulls, to bears to bulls. We'll take that, right? From a mid-level function up. We don't want to curl in necessarily. We don't want to curl in from resistance to support, but we'll take that as a nice defining feature of a mid-level return. Then the hit at resistance, support, anything along that midline is generally, call it a partial return or otherwise. And a lot of dynamics ongoing here. Obviously you see that imperfect, specific ascending triangulation as well. We have reasons for not liking that pattern, calling it defective, etc. What we'll say is that re-hit and retouch into this zone on breakout yesterday. You got it, guys. Pay attention. Anytime we're breaking out, what are the top market participants doing? Possibly. What are they possibly doing? They're possibly hammering in while the rest of the market's focusing up and chasing a dynamic on breakout. You got it. And this one took a while. Let's pay attention. But we caught this move. It was nice in the back while I was on the road. 1.32%, but the 3.5 hours to get that back to a level of resistance. The market wants what? Your time. You got it. Was it worth it? You got it. Nicely done. I love to see this in the market because for me, you have to understand, it's like, you want to hear we're screaming, we're going to the moon. This is, that's what you naturally may want to hear. It's become popularized. We're going to the moon. Even Elon, #1 business guy on the planet, jokes about it on Saturday Night Live, right? It's just kind of what we want to hear. You know that. So his producers knew that, right? It is what it is. But so it's a little unpopular to say no preceding level of resistance, flip to support. This is our entry level. We caught that yesterday though. That's good on NVIDIA. So note that. Noted. 3% move to the upside. Note the interaction with the rising wedge and the conformance technically to what we would find to be within the parameters and guidelines of what we really solidly would like to look at for a rising wedge and for the expectations that come along therewith, right? Now, I want to let you know something, and it's very important because we haven't discussed it in depth, and you need to hear this. Based on our backtesting alone, this price can do anything it wants to do. Please pay attention. Anything in this zone. If it does anything in this zone, okay, and it doesn't break this line of resistance, as long as it's up and over and diverging from this structure, this rising wedge, this will remain a target. Okay? This will remain a target as long as what? As long as we have a continued divergence and we do not operate below the level of support, which would give us conformance with the expectation of the pattern. As long as I'm in this zone, I don't care what it looks like. I don't care, guys. I don't care what happens. I don't care how much this specific level is filled back in and then we take off. I don't care. As long as we do not operate below this level of support to give me the conformance, I don't care what goes on in here. I don't care if it looks like this and literally this, and we're still divergent. This is going to remain a level, guys, that I'm technically interested in. The result of that demand agreement, and you would say, well, that would be really pushing it. Please back test it. Please look at it. If you don't break this level of this level of support rather, if you do not break this, I'm looking for the specific divergent, okay, wedge tactic, apex target, period. Please test them, back test them. We have tested thousands and thousands and thousands of these, okay? Thousands and thousands. We, guys, communicate with people who've tested tens and hundreds of thousands of patterns, okay? Not, oh, let's look at this one, and no, proper testing. So pay attention to the dynamics. We had not gone over that. So to the extent that that was required, we said we would cover it. I said I'd cover it with you, and we just did. It's important to go through that. Let's take a look at where are we at on just a nice day to have been a bull, period. We concur, without a doubt. Let's take a look at what's incoming on NVIDIA, 20 moving average on the daily. Let's take a look at the, let's see where we're at. Let's go to Tesla real quickly and just check in. We're seeing that curl back feature here trying to essentially avoid the specifics. And this is where we'll just go back to an old time. Where are we at on our, just let's take a look at basic retracements. Let's just take a look at basic retracements. That 23.6 would still be a bit north of preceding level of resistance. I may want to check and raise up to the wick instead. Still not quite up to that 23.6 noted. So we have some differentiation, some pattern to Fibonacci, which is standard kind of operating procedures in the market. We have some pattern to standard, and this is Tesla, so of course you do. Noted. When you're looking at levels for Tesla, of course you have differentiation. True? Yes. Now, in the context of looking at the 5-minute, noticing momentum, drifting, right? Drifting, picking up at the, let's go to the 3-minute and take a look at the 3-minute, which is trying to engage on the 20 moving average. There you go. As you find these levels, force yourself to operate on them. Just in terms of practicum, force yourself to operate in line with RSI, stochastic, and MACD here for a minute. Just force yourself to. If you're having problems going in every different direction, nothing's working out, spend a little bit more time forcing yourself to go through some levels of engagement consistent with RSI, stochastic, and MACD. And you're going to see that, well, we have an interesting correlative here with momentum. Yes, you see the momentum turning down? Interesting, our cap line's turning red. Now these are target functions here along with price, but you see this, cap line is blue, turns red. Now cap line catches this red move, the bear stepping in before your classic momentum will. Typically it's going to be, there's a higher level of calculation that's involved in this cap line, but you're going to see some confluence, quite a bit of confluence as you back test the two and say, okay, wait, so we're looking at blue, typically meaning up in terms of momentum, down would be red. I can clear this up a bit, but just notice kind of the additional feature set here that you can work into the dynamics, right? Green up, out, and over, and you'll see some variability, but even here, take a look at this. In terms of your momentum, you've got a bit of a drop here, right? You go red on the cap line. What's happening on your momentum is dropping. Your momentum is dropping here on the 3 minute. So you're seeing this momentum shift to the upside. You're seeing this blue, right? Meaning bullish. We're getting bearish, bullish. We're getting bearish, bullish, boom, to the upside. So just notice that level of confluence, and as you place targets, I'm going to encourage you to remind yourself of Z-Pack. Z-Pack Bollinger. I would tell you all, and you know this, that the specifics of Z-Pack are heads and tails above probably what you're doing, and they may be heads and tails above what the guys, what 99% of traders are doing, 98%. I don't know, guys. I would say it's pretty high. Let's take a look real quickly at Z-Pack. We have a whole series set on Z-Pack. You know this. We have a whole, just not series set, but we have an entire 2-3 plus hour, 2 to 3 plus hour, I would say, review of Z-Pack. It is really dynamic. I don't speak highly of something, particularly of something that I have done or worked on or created, etc., even in collaboration with the dev team, but categorize that as you will. But as I will say, this is the following. What I'll say is the Z-Pack from which the cap line is derived is phenomenal. This is beyond what the majority, vast majority of traders are looking at. I'm telling you guys, it is some cool, nice stuff. If you have not watched the 2 to 3 hours on the Z-Pack and what all of this is the price action. This is the volatility here. Within what? Because you're always going to say, man, if I could just get this lined out top to bottom, if I could just get this in range. Well, this is in range here. Yeah, on Z-Pack. It just is. You're getting a direct volatility read up and around, and you'll see the midline here, up and around a 20 moving average. You're seeing prices constructed dynamically, okay, to reflect the actual variable amplitude in the scale above. This right-hand scale is pinned at the level of volatility. This is a good tool. If you will focus a bit more on this tool, I really believe it has the potential to surprise you. I really believe you'll be impressed with if you sit and spend a little bit of time with what this tool, with active literal targets, with active levels of volatility expression, if you spend a little bit of time with it, and if you're in front of a computer already frequently, and you say, okay, I want a Z-score hit at 3 consistently. What are my odds of hitting the Z-score at 3? Look at this. Oh yeah. And it's going to have a price on here? Okay. It's going to have a price on here that's dynamically shifting and changing. You just don't see this. You don't see this type of stuff on TradingView. It's very well done. I have an alert on Bitcoin. Let's see what we have.
Down. Alert 4 hours top pro line.
Down. Alert 4 hours top pro line. Let me turn this down here. So I encourage you to look at Z-Pack. And if you were to look at it and say, no, it just doesn't work. Hey, I'm going to tell you, if you have that impression of Z-Pack, I'm really going to challenge you, if you're the type of person that can assess something validly, to take another look. I'm going to say, please, I'd really highly encourage you to take another look. If you, no, that's just not working. If you really think, oh, that's just not working, I would really highly encourage you to take another look. And those who have spent the time on it, yeah, you got it. It's a nice tool, very advanced, very nice, but not something that you cannot conquer and incorporate into what you are looking at. Now, this would be Tesla Wouldn't that be nice? Is it a nice bull pennant? Not really. Not really. Triangulated, anytime that we start to push and mold and we don't have that, what do we want here? We want a real strong, forceful entry. Okay, we don't necessarily like this jagged edge. We really would like to not have, we're kind of lacking the symmetry here. We're almost being invited to include this bottom line here. So bull pennant, potentially. Let's take a look back at our charts. But yeah, I wanted to go through Z-Pack a little bit today as we dive into the weekend. If you're going to be working on your charts, maybe look at that Z-Pack a bit more. Let's go into Tesla. And again, if you just force yourself to engage, just force yourself to do it. You find yourself firing in every different direction. Force yourself to engage on a 20 moving average. Just force yourself to do it. Just once, just maybe 10 times at a light level before you get really proficient with this. A light level, but something you'll care about, something you'll be able to participate in. We trade Bitcoin. You guys know that. I tried, tested, and true Bitcoin now. And we'll look at Tesla. We'll look at NVDA. Purposes of those dynamics we'll bring into our crypto trades. Correlatives, yes. Tesla, you're even involved directly with Bitcoin for a while. Maybe still could be some dark Bitcoin holdings. Who knows? Some cryptic crypto holdings. I don't know, guys. With Elon, who knows how that's all situated. But looking at that level of engagement, bam, 20, 3 minute. Can you force yourself to do this? Yes, you can. For those who have it, it is a different journey if you'll just deploy a different tactic. You guys got that. So the question again on, let's look at Tesla. And we can look at the rising wedge feature and we can discuss what about it. On NVIDIA, we prefer the NVIDIA rising wedge, okay, because of this kind of this partial return here. Nice partial return to hit back into a resistance, right? On Tesla, all we have is the curl in feature. Do you see the distinguishment? Ultimately, it may prove useless, but it is a distinguishing characteristic between the two patterns that I'll frequently refer to, a curl in feature here, right? And we just need to be aware of such in our designation of such. Clearly, the market is really hot today. 2.82% for Tesla to the upside. We have NVIDIA 2% to the upside. Both on patterns that if you were a bull and you wanted it, you got it. On the 4 hourly, if you're a bear and you wanted to stick it to the market today, you got your opportunity here too, right? You just did. Now the bulls are where? Bulls are on that 3 minute time frame. They're going to hold that, right? You got it? Bulls had to hold that 3 minute 20 moving average, right? You got it, huh? Now 0.5% move, not bad. A bit of a push noted, right? What's engaging? Cap line on the 3 minute. The bears are pushing into the 3 minute. Now, what do we? And here's that bull bear battle, right? That we just talked about on the weekly, on the daily, on the monthly for Tesla that engaged. Fire and ice, bam, bam. Nicely done. So fire and ice on NVIDIA. Let's just let's hammer back into it. Fire and ice on the weekly, green byline, bam. Feather in the caps. What's up? What's up? Nicely done. Nice to see. Well stated here. Nice to see our specific indicator suite and the creme de la creme of such to really perform well on such a highly classified and situated asset. We agree, a market leading asset. We love it. Very, very excited about it. Yeah, but we had resistance at the 20. We sure did. How many bears do I know that just got lit up on this? Or are still holding? No problem. They're convinced the recession is incoming. Nothing wrong with that. Nothing wrong with that. They've got some bad data to look at. If you want to find it, you can find it. You want to, I mean, it's there, guys. It's there. Presidential election incoming. Presidential cycle incoming. We're going to situate U.S. of A with a big recession during an election. Potentially. You'll find something that history says about a yield, inverted yield curve. You'll find something that it'll say something about the presidential cycle. You'll find something that has to deal with solar flares, probably. True? We've got that one. That's New York Institute of Finance. I'll bring that up along with militarized war history, right? Without a doubt. So from battle cycles to sunspots to presidential cycles to we're staying away from the moon phases, period. We just are. You guys got it. Don't look at that stuff. Hocus pocus. So the point is the following. Yesterday, good breakouts. True. Yeah, Thursday gave us a nice breakout action with the opportunity to delve into the preceding level of resistance. Boom. That was the trade out, the breakout. Let's just reassess the week on NVDA, and we'll go through this on Bitcoin as well. And we're going to differentiate. We need to at least assess the assets in terms of the trade ops that they bring, right? The trade opportunities that they bring. NVIDIA was a nice week with a lot of range trading, wasn't it? Really nice swing trade potential. And in terms of an establishment of a range and then another boom, 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 boom. Really getting into some dynamics in terms of this bust on a bear flag being important. Okay, you recall that bust here being a carry over from that was an open, bam. True? Yes. True. Do we fill that gap? You bet. Boom, to the downside. Blackjack. Do you remember the blackjack this week? Oh yeah. You remember the swing on NVIDIA. Now, how are we supposed to not trade this? I'm just curious. Interesting, slightly interesting. I mean, do you expect someone who loves the market to not want to trade this thing? You'd have to be just, I mean, I don't know I have no idea how you could expect that of a human being who likes to trade, right? So what did we get here? Classic blackjack, bam, on open, right? Yes, then what do we have here? We had another descending triangle. Remember that on the lower time frame? Yeah, everyone's like, yeah, I remember that. Huh? What was this? Where was this? Where was this? We may have to pull into a bit of a different, it could have been the preceding zone. I'll find this to the extent we should be able to identify it quickly. Let's see where we're at. This was the blackjack, correct? Let's see. And on open, we were up, out, and over. Yes. Then we had, where are you? Where are you? We're on a specific time frame. Let's see what we have. I'll have to find it. We'll have to hunt back through. We've got all the charts. It's going to take a minute to hunt back through and find it. The bottom line is we had a real heck of a sharp recovery, didn't we, the one day in terms of the volatility? Let's look back on in through this zone. Let's look back through here. Let's look back through here. Was this on open as well? It was. This was it, guys. It was in this zone. So we had multiple hits and moves up on blackjack on NVIDIA. We had 2 days. Day one, boom, up, out, and over. You got it. We had another day on blackjack. Double bottoms, guys. Who becomes interested underneath descending triangles? Bulls. Looking at this framework, bam, up to the top side. Bam, up to the top side. NVIDIA likes blackjack, huh? You got it. Look at it. Pretty cool. Pretty nice, nicely laid out. So this was the feature here. So as we review the assets, just in terms of volatility, is Bitcoin more volatile, more advantageous to trade, right? This is a little bit skeptical. We're in a descending triangle, but we got the recoup, bam, on open for NVIDIA. Then we had this descending triangle. Remember the percentage of descending triangles that would actually head down to this level? That percentage probability of 10 to 20% of the time you'll get that big of a move from a descending triangle. Yeah, so that was heavy, as was the volatility expression here. She's definitely been getting our attention. You guys know she's been getting our attention, without a doubt. Yes, this seemed like a big move, didn't it? It really did seem like a big move on different time frames. You'll look back into this bottom line, bam, gap fill, yeah, boom, boom, from that preceding blackjack open. So the bottom line is this: a lot of orders parked just below the specific flat bottom supports here traded. Yes. Just like the NASDAQ. Just like the NASDAQ. Now, if you're a bull, I cannot convince you to short this thing here. I barely can. I'm telling you, if you're bullishly oriented, I could barely convince you to short this here. Would you want to short this here? No, you would not. However, you need to appreciate one thing, that anyone that was parked in a short here on, you guys get this, anyone who was parked in a short here to reach a downside target got hammered on the open. Bulls have been laying waste to the bears this week. In fact, that's the NASDAQ here. We saw that on NVIDIA time after time after time. Now, with that said, who got paid this week? Oh yeah. Remember the 2 to 3 straight days? NVIDIA bears killed it on the 20 moving average on the weekly. True? Annihilated that line. So many hits, so many flash trades. This was a great week to be a bear, except for today. Anybody who took the Friday off and decided to go have the fun vacation, they had the perfect timing, huh? But, and really yesterday too. But this line paid true and paid with precision down to the lower time frames. Fact, absolute fact. So bears had a good week. They did, didn't they? They had a good week. Don't forget that. Don't forget those hits. Not blind trades, point and shoot. No, guys, those were nice trades. High level of, let's say a high degree of technical expectation in terms of the level of interaction there we would expect, and we got it. It was a nice week, wasn't it? Good trades, good trades. Now, guys, I don't know. I'm going to talk to you guys about that in person, maybe. Let's talk about, that's the NVIDIA Tesla. And we see the constriction, we see, and what are we at now? Well, here we go. But the bulls have been reinforcing the 3-minute. They're on the 3-minute. They sure are, guys. What do we have as a distinguishing factor here? And when we're starting to go kind of sideways, et cetera, when we're starting to look at, well, a sideways push, well, the market's slowing down, well, okay, what starts to come into the equation? What do I start to look for? What's relevant? Volatility. Where's the volatility? And realize what goes on. Realize this. As the market starts to slow a little bit, as we look at the 4-hourly 20 moving average, being that entry thus far for bears, okay? If you decided not to trade the bull flag, for any VIP who traded this yesterday, hey, nicely done, nicely done. We brought this last night. Before close, we did. In terms of the specifics, let's see here. In terms of those specifics, if you decide to carry a trade in, you make sure that you do that within your own assessments on anything, whether or not it's crypto, or, and you won't carry a trade in on crypto, but just to assess what's something else we're looking at. I don't want to look at this. What is this? I'm telling you, you have to pay attention to that. VIP, you know what that is. You know what that flag is. Pay attention to it. Just pay enough attention. It's not as broad of a pattern in terms of the dynamics between the, it's not as well formed as I'd like it to be formed, but we cannot ignore that pattern. And that may be, pay attention please. That pattern could be, that I just showed you. Last night we went over this before close, saying bulls will reinforce this position, bears will try and reinforce a different position, right? But on carryover, if you're a bull, you're going to carry that over. You just are, you're parked in a bull flag. If you're a bull, you're going to carry that. That's just the way I framed it. So if you did, congratulations, nice hit to the upside. Now, as we look at any kind of an indication of what could be reinforcing the market in terms of a bull flag, you guys got that in the back, right? In terms of the bull flag, I won't go over that too much. What I will say is the potential on NVIDIA, just pay attention. The potential on NVIDIA to get into an absolute point of recognition, and we've discussed this, and it would be, what did we refer to this as? It would be after the capitulation of this carry down, it would be, what did we say earlier this week? It would be a really just dynamic move, right? It would be an extraordinary move. That's exactly what we said about it. This would be an extraordinary move. okay? And what did we say about it? This would be an extraordinary, I do not want this line raised at all. I do not want to create anything with a rising level of resistance and a rising level of support. You know this? I don't. I do not want an upward, guys, leading diagonal per Prechter on, you guys got that, okay? Prechter Elliott wave. I do not want a leading expanding diagonal at all. So if I can flatten this bottom, if I can find a real, you see, I want this flat, please. If you're a bull, you're like, please, if you're in a time frame, give me this flat. I want this flat. You do not want this angled up. Your probabilities, it makes a difference in the pocket based on 40 years of aggregated empirical data, okay? Looking at the framework here though, this would be spectacular. This would be extraordinary and spectacular. And I did say, for the record, I did say that we would find an opportunity if this pattern were to complete to the upside, that we would find an opportunity to be a part of said pattern move to the upside. That we should run into some dynamics. I said we will, maybe we should, okay? But we, based upon all reasonable expectations, we should have the ability to schedule an entry on this pattern and somewhere in this zone for, let's say, the extraordinary event of us looking at and here we go, but you start to say, this would be extraordinary. Weekly green byline, that would be one opportunity to participate in this pattern, even along the very actual bottom on NVIDIA. Fact. Beautiful, beautiful. It's our weekly green byline, guys. That hit the bottom, nicely done. But if you're to look at this amplitude carry up to a breakout, again, this just starts to look really impressive. In terms of a potential, this is why it would be extraordinary. Pay attention. You'd be looking at a 30% move to a potential full max target move of, and this is just why it would be extraordinary, of a 43% move. So if you don't own that weekly green buy line, you had to look at it, and you know this, you had to look at it and say you didn't want it. First of all, do we have lower orders? We'll always have lower orders. We just will. If you don't, you're not in the market. Okay, you're just not. You may be, you guys, you're not successfully in the market if you never have the ability to participate at a lower level. You're just not. You know that. Correct me if I'm wrong. That's not going to make sense. So first of all, we had the ability to enter on the green buy line on NVIDIA. Perfect. Slam dunk, fire and ice. Yeah, bam. Kernel calculative engaged, and bam on the weekly, which we discussed. Also, opportunities within here, we have to give it to it, had opportunities within here to enter along preceding level of resistance, flip to support. Now, if you don't ever want to engage in any kind of a carry trade overnight, the plot thickens slightly, okay? If you don't want to ever, and you're going to have to make a concession here, just realistically, like, okay, that's fine. I want to participate in this pattern, but I don't want to have to carry over a trade overnight. I'm uncomfortable with doing that. You're going to have to make a concession at some point, right? It's going to, by a de facto concession required. Deal? Deal. So as you start to stack these opportunities, and pay attention when I do say, just pay attention, because it's a fact. It's not up for debate if the bulls will. It's not a question. The bulls are in a bull flag, a nice bull flag. They will. Okay, they will. They did reinforce a bull flag overnight. Boom, right? Are you a bull? If you are a real bull, you did reinforce this overnight and got paid on the launch today, right? Yes. So you're going to have to, at some point, to participate in the larger dynamic moves such as a potential, and we are way far away from a 31% gain, measured, confirmed 42% gain, 43, 30 to 40% gain. You're going to have to get involved and experience some risk overnight, which is part of the reason that we enjoy crypto. Crypto is at our behest 24/7, 365. So we take a lot from NVIDIA. We take a lot from Tesla, market leaders. We'd like to see, guys, some flash trades. Yeah, I mean, I don't know how you could stay away from that many blackjacks on any asset as NVIDIA threw at us this week, or such a sweet green buy line. Hello. And this is one of the moments, I promise you, that will make you believe that you never want to be without this indicator, right? And frankly, this is one of the moments and reasons why I will go back and delete people from the indicator who are not trading with our group, period. You just heard it again. You're going to continue to hear it because I'm not going to dilute the power of this indicator. If you are not trading with our group and you happen to be on the list, even if you're in our group, technically speaking, for all I know, guys, I do as a protective function. I don't know who they're giving signals out to. This is ours. We've had people open up groups in Japan, Korea, I don't know where, guys. Farming out alpha trade signals and everything else. No. You're either locked in, and you have to understand it's been near full, and it has been a full year of work since Fire and Ice to machine learning to Z-Pack. Yeah, it's a lot of work just to let roll off the cuff and no problem. Well, such and such isn't even trading, but hey, why not? I mean, not with NVIDIA on the green buy line. No. Not with a full year of work invested into the indicators. No. It doesn't make any sense. If you're ready to trade in the future, great. But if you're paper trade on, go just to put ourselves at ease. You paper trade on your own time, okay? That's not VIP. You paper trade on your own time. It's our group. We trade well and we have a reputation. So you paper trade on your own time. That's it. We put a year, hard work. And shout out to Venus. We've been building. We have one of the most sophisticated, if not the most sophisticated, machine learning algorithms on TradingView, period. I'll put it up against anything. People don't even know how this works. Or what. I haven't even gone through the details yet. It's so sophisticated. You're not going to find you're just not going to find a better system here. It's really nice. But if you're not trading with our group, I'm not going to hand keys over to you, to some other group. We're just not going to do it. We put way too much time. And you guys don't really realize the amount of work and effort that goes into these things. Me, specifically with machine learning. Yeah, it's a lot of work, So I know that you guys appreciate that. I hope you appreciate that. That's required. I appreciate you guys. Ones who are trading with us. Way to trade. Nice to see you trade. What do we pick up here? A little bit of that expansion again that we identified. Bitcoin. We'll go back to the original chart that we had. You'll just see machine learning in play, right? A lot of different settings. I've told you guys about some of them, but again, at some point we're just going to classify high volume traders and low volume traders, and that's okay, guys. That's okay. But higher volume traders have things hooked up to Starship Enterprise servers, and I come from that background, from like an institutional background in terms of levels of engagement at high levels. I met a few guys last night. They were in they were in investments, and I started talking about a small world of people that I knew, they knew, and which projects I had worked on, they had worked on. Like, whoa, man, you pull out that name, and I'm like, yeah, I know that name very, very well personally. So that's where I kind of come from in terms of just, I always wanted to be the guy in the room or on the top floor or wherever it was with the right answers and to be able to deliver those answers. And that's why I'm driven to deliver those for you. So if it's with a bit of discretion, it is a must to respect those guys who are also in the room who want to be right and are pushing to be right and appreciate being a part of a group that just wants to be right. That's it. And by that, I mean correct, right? Tesla, 4 hourly, bears having a little bit of fun today, right? Recession, incoming. You got it. Under descending triangles. Where do bulls like to engage under descending triangles? You got it right. Z-Pack Capline. This is from Venus. QKD, best indicators in the market. You guys, without a doubt. Venus, you know this. Boom. Boom. Without a doubt. Nice to see you here this morning, Venus. And can that girl trade? Good gosh. Can she trade? Boom. Big time. Not that you're scaring off other traders, Venus. Is it possible? Oh, I don't know. I don't want to go join that trade group. I'm going to get beaten by a girl. By a very, very distinguished, very professional woman. She is good, guys. And we tag team up a lot in the back. You guys know that. We trade big time. Looking at the specifics, let's reappreciate this week and what it gave us. First of all, bears got paid phenomenally well all week long on NVIDIA. True? Yeah. On the, what was it, guys? What was the level on NVIDIA that we sat through multiple hits into that weekly 20 moving average? Oh yeah, nice hits again. Boom, 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 boom. This was a nice level to reinforce. We had the specific range feature of NVIDIA, which made it just awesome. Bam, 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 bam. This was sweet. A lot of nice trades, a lot of volatility. That bear flag failed. You got it. We traded that breakout yesterday, bam, to the upside. Flat top resistance, boom. Bottoming formation, we called that a cup and handle. Differentiated, okay, defective, sure. But we had that cupature nearly, you see the cupature, right? Cupature in the handle, bam. Differentiated on time frames with a bit of level of variability. What's important to us is that we have a consistent level of volatility to work with and a measurable and appreciable degree of let's say reliability on the patterns in terms of their operation, in terms of their what we have come to know and really internalize as a group, personally and amongst our group in terms of those probability sets. We don't want the 60%. We get it all the time. We don't want 60%. You take, tell the other group, the other guys, you guys take 60. You take 62%. You take everything from 51% to 62% and go have fun. You take all those patterns. Ideally, we want 75%. If we can take a 62% pattern and get some additional confirmation, bring it up to a 75% pattern, great, right? If I can find a way to address in a specific strategy and I can get into a 74%, on Tesla, a 71%, now we're starting to look like we know where we're going. 74%, okay. Well, give the other guys then. Don't just look at these. This is another set that I'm working on. Shout out to Lucas from Switzerland, dev team, Switzerland. Good guy. Lucas, nice talking with you this morning. Hopefully we got all that worked out. I think we did. And yeah, this is a nice to see a 74%, 71%. If you're looking for 80 and 90%, guys, you can get 80 and you can make a penny. It reminds you of Citadel. Huh? Citadel can get 100% and make like a hundredth of a penny, potentially, right? So, looking for the probabilities again, and as we assess NVIDIA, as we assess Tesla, and as we work those into our trades on Bitcoin, ideally that's what we're looking for. What's Tesla talking about on the hourly? What is Tesla talking about on the hourly? Golden short, right? Friday on a golden short with a nice move up. Take a look at at your momentum. Take a look at your momentum, which now looks easy, sure, but really sputtered here, didn't it? Absolutely on that hourly, really sputtered, inconsistent here. Then, of course, the trajectory up, and then we went green and bam, bam. So we closed yesterday green here. True? Yeah. We closed yesterday. Let's take a look at this on the 15 in terms of momentum. Where did we close? We closed here. We closed right here, guys. Still above that midline, technically bullish with this kind of a framework on the 15-minute. In a bull flag, right, on Tesla? Yeah. What did bulls do? Exactly what we said. Gonna reinforce the bull flag. Now, at their peril, of course, within their risk tolerance, of course. And what did the bears do? Well, the bears, tried to reinforce the other bearish patterns in play, which we also noted. So nice to see the bulls really hit into the week. And again, what was it? It was on the NASDAQ. The most important thing of this week was the hit into the 23.6. Bam. Nicely done. Nicely done. And what do we technically have here? Technically, on that daily, I want to call it, because this is my next big project that I really am excited about. I know we have so many projects. One thing that does, though, anyone comes into our group and really wants to trade with us, I can give them 12 indicators. They all work, and I can let them go figure out which ones they really like without us duplicating trades between ourselves and the other traders. If anyone chooses to really try and trade. Now, what does that do? It eliminates reflexivity, guys, or at least it mitigates reflexivity, alpha decay, all the types of issues you run into that are going to steer everybody increasingly. And beware. I'm going to say one thing about the movie Dumb Money. One thing, okay? Please listen. It's going to give the impression, again, that the groups with hundreds of thousands of people are going to win, or 20,000 people are going to win. It is a phenomenal event, i.e. happens once, what guys, every 5 or 10 years? If you want to trade like that, you can try, but look at your once every 5 or 10 years, or once every, really, as we look at it, maybe that's like once a decade it's happened, maybe. So as you look at that, there are people on the other side of the equation, I promise. I've been put in rooms to capitalize on specific issues in business at very high levels. And whenever I see a trader who gets together with someone else or has a kind of a publicly available idea and is going to capitalize and figures out a faster way to guys to build the widget or to smart the system, I tell them, like, look, man, you got some, and hey, credit to the dynamic that was portrayed. Just don't let it work to your deficit. Don't let it work to your deficit. Understand that consistency, if you can operate consistently in the market, you don't need that chance. You just don't. Much less the stigma, in my opinion, that goes along with that, because there's a lot of, for instance, on AMC, just we have to personally state this, on AMC, a lot of them were aggressive guys. I pulled out an AMC target, hit it perfectly on a big move on AMC. When it was throttled to the upside, I literally caught the bottom of the move back down before a trajectory to the upside. You guys remember that was a big move. That was the pivot, boom, it was all over CNBC and everything else, right? On Bloomberg, CNBC, I structured and literally hit the pivot in terms of the target. And when that group started to follow and hang around me, guys, it wasn't good. I stopped that because of the dynamics of that group. It's not who we are. I'm going to reinforce it's just not who we are. A lot of guys in that group guys or girls were showing up saying, we are the problem. Wall Street, we are the problem. But more aggressively than that. What kind of a deal is that? That's nothing. That's nothing I'm going to have any part of. Like a fight the power. There's too much money to make in the market. Maybe you make money on that one, but your overall emotional state to me in the market is deficient. And the more emotional you are about anything in the market, more personally you take anything in the market, I find that to be a general deficiency. So that's my comment on it. Be aware of such as you watch this movie potentially that reinforces and kind of will fascinate us about the dynamics of participating in these group online sessions, guys. They're highly controlled, and just be careful of the chum in the water that may be for little baby upcoming whatever. Don't be the chum. Don't be the chum on this one in terms of that dynamic. Just be careful, guys, because it could really be used to your. For all you know, you're watching that movie, then the next thing you're online finding a next. Just be careful. Be careful online. I've studied such at some higher levels, guys. Be careful online. Okay, so enough said. Looking at the week, let's digress away from that. But if you see the movie and you like it, great. I hope it's a great movie for you guys to all watch. And just what a time. It was quite a time. So Citadel, that got brought up in terms of Citadel, right? I wonder if they find a way to make their money back. Times 10. Times 10, guys. You think they found a way to make their money back times 10? I don't know. What do you think? Well, yeah. They figured out a way to make their money back times 10. Yeah. Maybe on the same people? Do you think they do that on the same people? As they sit back, relax, and enjoy their return statements overall, as they, we got Melvin Capital. I don't know enough about this to really speak. What is it? Was it Melvin? Let's see. No, it was Citadel AMC. But guys, as Citadel sits back and counts the largest returns of any hedge fund and structured equity, guys, business on the planet, okay, as they sit back and kick back on the largest return structure on the planet. Yes. Did they get their money back? Times 10. Be careful. Just be aware and be careful and be cognizant who you're playing with. That's a tough, and what did we have? All types of things ongoing right now. Very interesting. Lest I digress. This looks like Chinese writing. Do you guys see this? Look at this. It looks like Chinese writing just because it's Friday, guys. I have to go through this real quickly. Look at this. What is this? What is this? You guys see this? It looks like Chinese writing on my screen. Isn't that nice? That's a symbol. It's the 4 hourly and the 6 hourly. Okay, got it. Interesting. Now, this is going to be a cool indicator as we talk about progress, and then leading into, we have to have a little discussion on Friday just to kind of wake you guys up, be like, what's going on? What are you doing this weekend? Dumb money. Don't return. Don't guys. Be careful. Citadel's going to get you. I'm just going to tell you, they're going to get you in the end, okay? They already have. In terms of the move, you can question their returns if you want to. I'm not a big fan of Citadel at all, neither Griffin, but anyway, neither here nor there. Now, we're going to delve into this specific tactic. This looks like the cap line up and down. Was up. Looks very nice. You see that we have engaged on, what is this, the 4 hourly and the 6 hourly? Yes, indeed, we have hit that level of resistance. Those are simple moving averages. The daily parked up above on Tesla. This is nice because you can see every time frame. You can see the weekly simple moving average that was in play, throttled up and down. Guys, that was nice on that. This is on actually the 4 hourly. We want to go to that daily. Let's go to the daily and take a look at that. Take a look at those same dynamics. But this is going to be a multi. You see that weekly here on Tesla. See the weekly simple moving average, that 20 that engaged directly here. There we go. Take a look. You see that, boom, bam. You see, nice interaction here. Great way to show you on Tesla, right? What happened? Reinforced the monthly simple moving average. That's the monthly 20 moving average. Bears trying to push below. You got it. Push below that weekly moving average. Nice layout, huh? Really excited about continuing to use this with some, guys, just call these momentum factors here. With some momentum factors lit up and some state conditionals. Are we over or under the 20 on these time frames? What's our momentum look like? What's a percentage probability hit of X, Y, or Z as I may define such? This is a good one. This is cool. You're familiar with the red or blue for the cap line, right? I have it colored like the cap line. It's not required. And I just formulated this code. I thought it was really important because we're always flipping between time frames, right? We always are. So I just wrote this in terms of just the ability for us to appreciate all of the moving averages and the standard deviations on the various time frames. And you'll have an arrow here if we're up and over and have a target to the upside on the weekly. You see technically on the weekly here, we're up and over, so we would have a specific, and this is so important, we'd have a target to the upside of that top side standard deviation, right? It's a Bollinger Band tactic. Yeah, so we'd have, in the way we have a daily, we have a simple moving average that needs to be cleared as a hurdle. Yeah, if I go down to the 4 hourly, it's only going to show you standard deviations at your level or above on a time frame, okay? But you see that we have these additional hurdles, that 4 and 6 hourly. and those are both written over each other right now. I have the 6 hourly on there just for testing purposes, but that 4 hourly, the 6 hourly, right? So you see we have in line with these upside targets, yeah, that weekly, it's now going to be expressive of, okay, so we have the upside target, but we have these specific thresholds to clear. So this is what the market's looking at right now. The bulls are looking at right now as we assess. First of all, we see gap to fill. You got it, 262.45, call it. Gap to fill, you got it below. So in terms of we got targets to the upside, targets to the downside, but we have immediate and pressing levels of resistance. And I'm looking forward to finalizing this specific indicator, especially with the momentum here. And we're working on something else which could be very interesting. Remember our cap line across the top on Tesla. Boom. Hello. Now you just saw this play out on the 3-minute, right? Yeah, you just saw the 3 minutes. You'd be like, well, why are we spending time on the 3-minute? We just saw the specific cap line push into and that specific dynamics in between the cap line and the 20 moving average, right? Looking at the specific here on the 4 hourly, you just got to pay attention to the 4 hourly. You know this, you got to pay attention to the 4 hourly. Look at this, beautiful entry. You had to clear what? Hurdle to the downside. Bears had to beat the bulls to the downside, and they did, 15%. That's a nice move. Shout out to all the VIP who caught that move. So we're looking at hurdles to the upside. If we have a target to the upside or downside, what do we want? We need a pattern to get us to our target. So let's back off a little bit and say we've been open for a couple hours in New York, just about that. And we've just been in the same real crux of a situation, right? Trying to be cautious over the top of a rising wedge. To be on NVDA of a well-structured pattern, having hit into the maximum of this pattern on the specifics here. And this was one you had to catch overnight. You had to say, okay, I'm going to park myself in a bull flag. That's a heck of a way to wake up and think about what gets reinforced here. Think about this. To some extent, you're a trader, right? You're a trader. You like to hit the market. You like the fact it's aggressive towards you. You can be aggressive towards it, but responsibly, right? But it's a nice Friday. What's going to be the real crux here? Okay, listen. It's a nice Friday to wake up and say, on the week where we are sandwiched in and hammered below moving averages, above moving averages. Yeah, it's a nice week to flex up and say, yeah, I parked it in the bull flag yesterday and I made money in the first 5 seconds of the market open. Yeah, I know we're going to have a recession, huh? I'm going to the lake, I'm going fishing. I'm gonna go hop on my turbo jet ski, have fun. Yeah, I'll write me about the recession. I'll see you later. I'm gonna go hop on my turbo jet skis. It's something fun, huh? But just realize whether or not you're into turbo jet skis, the whole rationale is it's been all week long from every direction we can get. Recession. So it's nice to see, okay, guys, was it a perfect bull flag? What do you think? Yes, so opportunity to participate in the market at a level is just kind of cool, huh? Think about it. What did the market give you today? What did it give you yesterday, which is a perfect bull flag to settle into, if you wanted it. And if you wanted it, you own the move, and boom, to the upside. That's not a bad dynamic. Think about it. It's pretty cool, huh? You guys tell me what you think, but that's pretty cool. That's not bad, huh? So Friday's yours, the weekend's yours. But you're going to want to check in. If you take out early, you're going to want to check in and see kind of what the close is going to be like, right? And you can sit around day trade, no problem. But it's a nice, I like the dynamic of a nice bullish pattern, bam, amidst some real bearish sentiment that just is going to stick. It's just going to stick. We're not going to hear the end of, we are not going to hear the end of recession. We're just not. We are not. You guys agree, huh? Blackjack, huh? Boom. Blackjack indicator. Oh, and these will trade great as long as we recover and bulls show up. If bulls don't show up, it might as well be a bearish continuation sign. Period. recognize such. So we'll go through the details. Upside targets, downside targets, where are we at on the NASDAQ? Nice. You see inverse head and shoulders in play. Rising wedge feature on the NASDAQ. Might as well look at it just real quickly in terms of the overall dynamics. Checking in with Bitcoin, keeping an eye on price. Looking at Solana up 2%. Looking at some different investments. Let's see what we got. Just what do we have for cryptos? Ethereum, XRP, Sheev, mighty Sheev, we used to say. They mentioned Sheev on Bloomberg, not bad. Matic, not recently, I don't think. But looking at a bit of a bullish structure here on the NASDAQ, right? What are we cognizant of? And the market's just going to do this. You know, this is the catch. This is the notion. Pay the 23.6 entry on the bulls, pick up the orders below, and then what? Cause some conflict between the crowd that wants to know immediately, are we going up or are we going down? Force them to dig into the lower time frames, play on maximum probabilities, and schedule in and partition their cash and their risk just as such and so, right? Let's see what we have. And this is the one issue that we're not crazy about. You guys agree? We're not crazy about this designation. It's a little bit stacked into, let's just say stacked into more of a triangulation. It's more reflective of a triangulation than a descending wedge, but technically it is still a descending wedge with an upside target. We agree? Yes. We concur. Now, where's this thing? Come here. We'll just use this one. So technically, we have an upside target, inverse head and shoulders. So the question here is what? On the NASDAQ, we are looking at, and the broadening bottom formation was critical. We noted this in the back, just to pay attention. Let's go into the 3-minute. Was it? I believe so. There we go, right on line. Yeah, we noted that in terms of a broadening bottom feature. Now you see the left shoulder, head, right shoulder. So the bottom line is this, it's the price action plays Koi likes to consolidate after giving one of these rounds, and thank God you're on the right side of it, just generally speaking, thank God, because you could be on the wrong side of this and getting annihilated. Every breakout long, well, no, the way the market has been playing, every breakout is back to a preceding level of resistance. True? You got it. Not playing this moon, it's moon time. No, guys. Every time opportunity to reinforce the market structure around others rather than having it reinforced around you. So we saw that yesterday on NVDA, on Tesla. Nice moves. NVIDIA just struggling along as we are in that 438 zone. Backing out. Don't want to do this. Hold on. Let me back out this way. There we go. Bit of a look at momentum. This is Tesla. So what we will say is the following: as we see pattern development like this is the difference between crypto and equities. You guys agree? Without a doubt. A little bit of a different mindset, right, develops as well. People taking the odds for the next day's move. Bulls scheduling in either, let's say NASDAQ at this 23.6. Just understand the type of player that gets involved here at the 23.6, and that's what I'm doing this week. I'm holding that position, and that's it, and you're rewarded. Now, the weak player can say, okay, well, that was a 2.73% move, etc. But forcing down into lower time frames for these micro flash trades. The one thing, let's focus on this while we said it. The key differential between crypto and equities that we're seeing is that equities, right, it will require pre-positioning. You want to catch this move, it's a pre-position. It doesn't have to be. You can relax if you want to miss a bull flag, even though you're a bull. But if you're a bull, it bothers you that you missed it. That's why I put it as such yesterday in the back to the room, that bulls will, I didn't mean like conclusively they're going to move to the upside, but I said they will reinforce this move overnight, right? They'll reinforce this move to the upside. And at the same time, the bears will reinforce, and try and, spoil the bull the bull show, right? But that's what you look for. I mean, I bring that up because if you're a bull and you didn't trade that, you don't like yourself right now, right? You question whether or not you're really a bull. Get your head. You don't want to be too risky. Don't do this at a level that's going to hurt, but you know this. If you're a bull and you didn't participate in that, that stung. Like, man, I just missed a bull flag? That's not cool. So, I mean, this is the saving grace of it. If you're a balanced, even-keeled trader and you decided, you know what, let the bulls have some fun. It was overnight. I do not want to participate in anything that raises my risk threshold, and I'm happy on a 4-hourly 20-moving average. I'm happy. Yes, it took about 2 hours into the trade day, but you see, I don't need this overnight stuff, which you don't have in crypto, right? The difference is it's all night. It's not carrying the risk overnight. It's you're going to be up all night. Sometimes, if overseas get feisty, right? We get some price action overnight on something. So that's the difference. You carry up and bam, hit into your trade. You want to enjoy the market. And this is the bull versus the bear discussion here, is as you look at it, the market really, to enjoy the market really, you don't want to miss a move like this. But be prepared for any move to go against you. You know this. And so it's not without saying, I'm spending a lot of time designating between bulls and bears. True? Seems as such. Because I've been around a lot of high-level traders. Even if you're saying that you want to know if it's long or short, or even if you're delving through that in your mind, you have a bias most likely. And I mean, you have a bias that you want to kick it to the moon, or you want to kick it down to the bottom of the Grand Canyon. Watch that, just kick, bam, all the way up to the moon. Look at that thing go. Or boom, all the way down into the Grand Canyon. Your bias is there, okay? So I don't say that at all as a scapegoat whatsoever in terms of directionality. You have your percentage probabilities. You have your levels of confirmation, your tactic entries. You can play both sides of this equation, definitely. The ones who do and play it well are the rare exception. Lot of experience required, and to play it even-handedly, to reinforce your level of success in longs and shorts at an even-handed level of participation, at an equal level of participation, is impressive. And you know it's difficult because you never want to be on the wrong side of something, right? You never want to be on the wrong side of something. Right. Over bullish, under bearish. You've heard that this week as well. Right? Yes. 20 moving average. Over bullish, under bearish. True? To form. Right? Did that hurt? No. 3.87% achievable. Macro, weekly, over bullish, Tesla, under bearish. So you've heard more talk into the bulls will do this, the bears will do this. If you find yourself not in agreement over any camp, you don't know really what to do still then, did it bother you to miss this bull flag on open? So much so that you can't stand it. It's just, you're disappointed and embarrassed. Because the bulls, you can't stop a bull from doing that. They're excited about it. They want to schedule in, hammer in with something. It's a bull flag, right? Did you also hit this? I'd be impressed. Did you also hit this? Now, if you have none of a lower riding interest and you fully release, you're going to be in a different category all to yourself. If you hammered in long, released full position, hammered in short, you are ready for a flash trading. Like, you're doing well in terms of being ready for just flash trading, higher frequency trading. You just are. But that positional front can hurt. It's really easy to say, well, over bullish, under bearish on the 3-minute, right? Sure is. What is she doing? She wants our time, doesn't she? Telling you she wants our time. The market will take your time. That's all right. If you are taking the market along with you, that's fine, guys. It's take all the time you want. Let's beat this thing. We enjoy it, but there are ways to maximize your involvement, and it's the level of proficiency at the variable. Let's just say the multiple levels that are there that make it difficult, right? Make it a challenge. We want a challenge. We want the excitement to wake up. Don't wake up and be like, man, I couldn't help it. I want to hear those stories, right? Just parked in a bull flag and boom, we rocked it to the upside. Everyone said we were going into a recession. I just went ahead and did it anyway. I couldn't help myself. If you just rocked it, like, it doesn't have to be a huge position, but that's a nice move. Boom. A little bit of just gratification, right? A little bit of reinforcement in terms of where you stand as opposed to maybe where everybody else stands. At least able to, if you lose on a bull flag, you lose on a bull flag. But I'm curious to know how you all traded that. And again, if you just decided, well, a little too exciting for me, no problem. I'll let the bulls and bears do what they want to do, but I do see a level of interaction on the 20, on the 4 hourly, boom, boom. So there's your trade today. That's nice. Let's see what we got. This is exciting technically to look at exactly what's going on, isn't it? It's exciting technically, just great trading. And so we're a little more comfortable with this NVDA situation, right? Because we have that better expressed rising wedge and retouch. Again, tricky area, yes. Tricky area, over resistance of a rising wedge, yes. Now, if you get in this zone and just continually decide to go short, you will get ripped. Just watch it. If you don't deal with the technical level of interaction, if you don't have precisely governing your trades some degree of, where is my, I can tell we have an off chart here. Where is my, there we go. Let me make sure I have my specific, let's see what we got here. Let me do this, and make sure that I've got this applied to all the time frames. There we go. So if you don't have a reinforceable level of interaction that you are dealing with, and you're just, guys, if things are just kind of, going in, just have a reinforceable level of interaction on your shorts, whether it be, fine. If you're looking at a target to the upside, granted, that's fine. And this was a bell formation, that specific volatility on NVIDIA that we look for, boom, to be a part of. Nice to see that work out so well. Flat top resistance below. Flat top resistance. Yeah, noted. Flat top resistance. We commonly see re-expressions to preceding flat top resistances. You guys know that, right? We see that commonly in the market. I always just say commonly. Now, is your level of interaction based upon targets to the upside? Fractional completion and probabilities therein at the 50%, golden pocket, 786, 86 at the full completion? Is your level of involvement if you're structuring above and short? Again, what am I saying? Do not, as a matter of practice, get up and above a rising wedge and continually just short in this direction, right? Because you can get creative with this, and this specific pattern will allow you to do so, but it'll get more creative than this. It'll get a lot more creative and something that you're either structured into appreciating or not. But in terms of this move, what will hurt if you just take it as an absolute fact? Anytime you take something for granted as an absolute fact, foregone conclusion in the market, it can sting. Inverse head and shoulders, you got bulls trying to push on it, right? And just load up enough shorts here. Yeah, load up enough shorts here and watch it rip. The market makers are going to make their quarter, huh? They are going to make their quarter. Ask old Ken Griffin. Griffin. I'm not a big fan of his old Citadel Ken. That's just neither here nor there. I just happen to not be a huge fan of his. I think I don't know. I like solid guys in the market. He just doesn't seem. He seems very. What do you say, this guys? He seems very Ken. He seems very soft, doesn't he? I feel like he's running a daycare. Have you guys listened to the CEO, whatever managing partner, Ken, CEO of Citadel? I don't know if have watched him, Ken Griffin. He just makes me think that he's running a daycare. I don't know why. I get that impression when I listen to him, and it's not very. I just let's see. It's not my style. It doesn't have to be my style. That's him. It's okay. I just don't want to go to work or anything else and feel like I'm in the middle of like a daycare. I don't need to be talked to like that. I'm a grown man. You tell me what's going on with the market, what I need to do. I don't know. I do not know. Tesla is screaming on the daily. A little bit of a different price action with this pickup. Yep. So, nothing personal about Ken. I just, let me have it. Give me the answer. I want the answer. All right, this is not no schoolboys here. We want to know. We need to know the truth, Ken. Don't sugarcoat it. Tell us the truth, huh? So, let's take a look at Bitcoin. Where are we at on Bitcoin? I want to see Bitcoin on Blackjack if I can. Blackjack again, guys. Let's appreciate this moment in terms of a return to preceding that apex move. At least the frustration there along on NVIDIA. Tesla also nearly at and a more aggressive target to the downside, we'll say, just due to the formation of that rising wedge below. Orders below. We consistently see this. We're picking up on some real common traits, aren't we? On NVIDIA, on Tesla, and the operation thereof. Man, the bears need what? The bears need some sort of cataclysm. They need some sort of Armageddon. Don't they? They're just waiting. They are one huge story away from a power drive home, aren't they? Yep, they are. It's like, when is that going to break? I don't know. They're just they're one story away. So what we're going to say is nice week of day trading, without a doubt. Nice volatility on Bitcoin. We love it. Again, we look at stocks, equities, really. Now, they do trade on BTCC, without a doubt, where we trade. But they provide us a lot of opportunities to see a lot of different patterns. When Bitcoin decides to slow down a little bit, and nothing like volatility on Bitcoin once she gets going. But we really appreciate the opportunity to trade them and to just assess them. Let's say this, for purposes of assessment, we delve into equities really for purposes of assessment, right? It may be someone's mainstay trading them. I'm not going to discount that. But when we see a great week like this with all the dynamic technical parameters in play, we're just excited to be a part of the market. Awesome week. Would you guys have scripted it much differently from the NASDAQ under? Would you have done this much differently? We did discuss directly this potential. Just interesting to see it happen. Nicely done. Caught that 23.6? You had to decide as a trader. Please listen. You had to decide. Having been provided this exact chart with this exact line here, you had to decide. You don't want to be bullish. You don't want to engage in the market here with any kind of a position on a correlative basis. Pick your asset, okay? Yes, you had to decide and make a decision. No, I do not want to be a part of the market at a level of interest. True or false? True or false, guys? True. You had to decide willingly, consciously, that you are not going to pull the trigger to be a part of this play. Now, you could have pulled the trigger, and then you could have said, well, I'm going to pull another trigger right here, and it's going to be a short. Do you carry this 23.6? Nothing wrong with pulling a trigger and pulling another trigger. You get stopped out, okay? And you're carrying your 23.6? That's a sweet entry right now. Yes. Yes, it's a sweet entry. Congratulations to anyone who hit that. But when I say that you have to consciously decide, I'm just telling you that you're making a conscious decision to not participate in the market long at a designated level of interaction. Clearly. So there's nothing magical about it. There's nothing, guys, there's nothing hero. There's no hero, whatever you would say. There's no, guys, it's not some superpower. You're just deciding to not participate. NVDA, weekly NVDA. You're gonna hear it from me. You got it. Weekly NVIDIA, because it's a sweet move. You had to decide not to participate. Well, you could have decided to participate. You also could have decided to participate on a short, and you could be out of that short. True, no problem. But this level engaged weekly green buy line. Yo, what's going on? Again, very appreciative of anyone and everyone who's made this specific trade possible. And looking at a pickup on the hourly on NVIDIA. Finally got there. What's engaging? Cap line, you guys. Let's take a look at how is that situated with the momentum? Let's take a real quick look on the momentum for NVIDIA on the hourly. Cap line in play. Sideways action still rising, right? Still that rising. Still a little bit of a lag, right? Sideways action, pushing, throttling down to the cap line. Still just a nice trajectory to the upside, right? And trying to reinforce that, don't even say it. If you see a rising wedge combo with an inverse head and shoulders, these are not the inverse head and shoulders that we dream of as bulls, just typically. Capiche? Yes, it's just not our, that's not our, it's engaged, has it not? It's traded. That neckline has traded. Yep, small trades, huh? Boom, boom, right on. Nice trading. Yep, 0.27%, small trades. Ideal, not in the slightest. Just typically not what we're looking for, guys. You know that. It's over the top of a rising wedge. It's just not what we favor. So I'll just recap. And once again, congratulations to all the VIP who are trading. Shout out. And what a long day yesterday. I got up at 5 in the morning. I had to drive to LA, and I got back at 11 or 11:30 last night. Nice. Love that LA, California traffic. Nothing is nicer. Just amazing, especially with construction everywhere. It's a pleasure to be a part of. Yikes. So a little bit weathered and worn. Wanted to make sure I got up after like 2.5 hours of sleep and was here for an open for you all. As we see, this is a nice little pickup, small pickup on the 5 minute on Tesla. What are we hitting? That broadening formation that we started with last night, brought to your attention in terms of that level of resistance, that curl-in feature. Bears guys are handing off to bulls, handing off to bears, handing off to bulls on resistance support. That's trying to be reinforced right now by the bulls. That's a heck of a difficult line to reestablish. Would have been easier. It's still engaging. Okay, but would have been easier if we had what? Would have been easier if we had, let me go through this, come here, would have been easier if we had gone down, up, if we had gone down, up, and then if we had a partial return to further identify the broadening formation and an inverse head and shoulders and up. This line becomes easier to reinforce at that point from the carry on across because we have that additional hit series into it, which we've avoided here through that specific bull flag pattern. You guys agree? Hey, we like that handoff. Nice clean handoffs. Resistance to support. Not crazy about a curl-in feature, right? Nah, we like good hits. Boom. Handoff. Bulls to bears to bulls to bears. Boom, boom. Nice. Yeah. With that said, look at them. You a bull? If you're a bull, you entered here. You just did. You know that, right? It's a level of consideration. This is on the 5 minute chart. Resistance, boom. Big hit? No. You may say, well, I'm in the trade. When am I supposed to get out of the trade? How much time do you have? Literally, I start to think like when people do this, like, you know, because you will say, well, I know I'm in the trade, I'm successful, I just never know when to take profits, right? You're going to have different trades, hopefully, that have different answers to that question. And my goal is to get you to the point where you can get in and out of a trade in 5 to 10 seconds, period. And when you get to the point where you can get in and out of a trade in 5 seconds, and you can hold a trade for more than 5 weeks, pay attention. If you can get in and out of a trade in 5 seconds profitably, and you can hold a trade for 5 weeks, yes, then it becomes relevant, really relevant in terms of where are you going to exit. I will bet you maybe decent amount of money. I will bet you, literally personally bet you, that your trades fall within a time cyclically defined pattern of exit and entry, and exit and entry, and exit and entry. And if I were to find the specific calculatives, or identify the calculatives on a time frequency basis of how long you're holding your trades, that there is a consistency and a patterning to it which you will not deviate from. Potentially with a strong signal, okay, strong pattern, maybe this one, but 80 to 90% of your trades are the same frequency duration as you're looking for and wanting a different target. If you can get in and out of a trade in 5 to 10 seconds, and if you can also hold a trade for 5, you can even say to 10 weeks comfortably, you are going to have a better assessment of your ability to operate in the market. You just are. Otherwise, as I'll just say, as you're looking for answers, that's part of the equation. Can you operate more quickly? Do you want one trade for 5 months, one trade for 5 weeks, one trade for 5 minutes, or one trade for 5 seconds? From the months to the weeks, let's say to the hours, to the minutes, to the seconds. Yes, okay. So in terms of the level of complication, well, I just got in here. Am I supposed to sell? What do you have to do today? Oh, well, I just wanted to turn the computer off and I'm going to leave and I'm going to set my exit target and I'm just leaving. Oh, okay. You and everyone else had that dream, and that just happens that way, right? Uh-huh. The market appreciates everyone who does that. You know, it's common. No. Now, scheduling in takes and targets at max probability moves, which means a 50% take. Yes. Means what? Well, you didn't exit here. You didn't exit on your, you got to talk to Bulkowski. He must have done something wrong in the Encyclopedia of Chart Patterns because you didn't hit your target to the upside, right? Well, Tom must have not done a good job looking at hundreds of thousands of patterns and empirical data sets, et cetera. I mean, you're going to have a big argument with Tom here because that's supposed to go to $256.16, Tom. Isn't that right? What's the percentage of these that go to $256.16? You want the answer, but you don't want the probability that goes with it. What's the percentage of them that go to the 23.6? Much higher. What's the percentage that go to the 38.2? Higher, but not as high as the 23.6. So you're at a consistent level of deteriorating probabilities the further you work up this ladder. Yes, you got it. So to say that you know or not your exits, your strategies, or take profits, right? What do you have to do today? What is your schedule like? What are you doing for the next 5 weeks of your life? Are you on vacation? Are you glued to a computer screen? You want 2,000 trades or you want 2 trades? Huh? You want 2,000 trades or do you want 2 trades? Do you literally want to schedule in on Bitcoin? This is highly relevant, guys. Do you want to schedule in on Bitcoin as we were to look at this? Or do you want to schedule in orders on the NASDAQ and leave them and just, that's it? Manage your futures into the NASDAQ and no problem, boom, there it is. Do you want to have, literally as you dig down into the 3-minute, are these all trade levels for you? It's just highly relevant as you look for an increased level of interaction in the market that you would be able 2. And let's see, is that, let me see where we're at. Let's see if I can clear up blackjack. I want to make sure I get that. Hold on one second. We've got a gap fill underneath, noted. So I bring up the time frames. I bring up the number of trades that you want within a specified duration, the fact that you're already very well established in your own level of frequency. Okay. What time frames do you like to trade on? Yeah, what time frames do you like to trade on? You like to trade on the 4 hourly? You like to trade on the daily? Do you like to trade on the 3 minute or the 5 minute? Are you capable literally of trading on the 5 minute or the 3 minute consistently? But you want targets on a micro pattern on the 3 minute or the 5 minutes or on the 30-second, and you want targets on the based on patterns on the 3 minute or the 5 minute, and you aren't consistent on that time frame? The complaint won't be that you don't have targets. We talked through this issue. The complaint won't be that you don't have targets or that you don't know where to go. It's that you're not consistent on your time frame. And nobody, particularly to highlight the people I'm looking at right now from CNBC to Bloomberg, is going to help us with that equation. Nobody from Ken Griffin at Citadel to the #1 finance experts on the planet are going to help us with, they're just not. Until we become consistent, then we have the answers. Then we understand our targeting rationale. We understand the time frames that are working or not. A 50% target to the upside on which time frame? And how consistently on this particular asset is that time frame playing out well? All right, we get into zones on Bitcoin, it's always the hourly time frames and targets. You know this, true or false? You know this. We'll get into specific time frames and targets where it's always the hourly. And will that change? Yes, it will change. So if you're involved in the markets, you know it's changing. Yeah, you know it's changing. You're picking up on those changes, and just don't ever look for the hard and fast solution when it's going to require you to interface with it on a technical basis on a continual fashion to demonstrate your skill set. It's just, and if you can pick up on the advancements in AI right now, and how really just marvelous of a challenge all of this is in terms of your interaction with technology right now, you're able to operate at a very high level, but appreciate the fact that to dispense with your level of interaction altogether amidst a very accelerated, just what we say, guys, against a very accelerated environment in terms of your ability to interact technically, personally, to just divorce yourself of the opportunity to technically engage in, on an individual basis, the market, and to not esteem that as some great challenge in a really dynamic market misses the point. You agree? I hope so. Did you catch it? To not want to personally engage in the technicals, you specifically personally engaging in the technicals, dynamic technicals, in an age where literally the top performing market is the producer of arguably next level, generationally, from an industrial revolution standpoint on, super trending, the literal evolution of the interaction of man with technology. For you to say, well, I don't want to interface with my technicals and technology, while NVDA is literally leading the market. Come on. You're missing the point. This is a technical game. These are phenomenal, guys, technology, the tools that we have, it's part of how awesome this market is. And when you interact with the market at a commanding level, and you can do that, and you show yourself and everyone else that you can do that, That's the magic of the market. True or false? That's the challenge of the market. You just want to make money? Great. Go open up a hot dog stand. Go open up a car wash. Go open up a cash-only car wash. No problem. No problem. Go open up a cash-only car wash. Go make some money. Go make a lot of cash. Go open up a pinball machine or if it's legal in your state, a gambling room. Yeah. Go get some permission from city council, open up a gambling room in the back of a few convenience stores you throw up. Make some cash, go make some money. Go play around with that market. Play around with the convenience store market and some side gambling machines, if they're permitted. Who knows? You know, they are in a lot of states, little gambling machines. Eh? Go make some money. But if you want to be technically proficient in a market that's being led by NVIDIA, that's creating graphics processors that is allowing us to craft into the market and grab additional components of the technology, of the technicals, a field that's been developing, guys, technical analysis has been developing for decades. Yeah, New York Institute of Finance around for 100 years. This is a big deal to me for you guys to be able to technically interact with the market, to be able to appreciate the technicals in the market, and to have some degree, which you do have a really commanding understanding of. Don't slight yourself on the appreciation as we look at the NASDAQ. Don't slight yourself on the appreciation for what the market really is. Don't miss the boat. The market's you. True? The market's you interacting with the technicals, grasping your level of risk, identifying, I made this move, bam. I got into the technical framework here of the bull flag on Tesla. And it's gonna be you saying that, right? Yeah, that's what the market's all about. You just want to make money, go open up a car wash, man. Women, go open a car wash. No problem. They'll make money in the right place. Make sure the weather's right. Do all your market focal whatever research and competition. Do your market study. This is a different ball game. This is you. Yeah. These trades have you on it. Yeah. I want you to interact to where this is an exciting Friday for you. Boom. I want you to interact here to where your level of proficiency in a very, very advanced and accelerating field. This whole field has gone crazy the last year. True, in terms of technical analysis, in terms of the features that we're able to bring and levels of sophistication that we're able to program into, it's very exciting. You realize OpenAI we have at our behest. We have. As I can program anything. I like to program the things it tells me I can't program, right? Just because I think it can do it. And then I found out I knew it could do it, and I knew we could do it in terms of the limitations it may put on me or otherwise, right? Biggest threat to freedom to the bulls on the NASDAQ would be the following. You got it. The hourly flat top resistance below. Who's interested in that? I don't know. Who would be interested in that? Every bear in the book. Can you get them away from this move? Probably not. Can't you identify like on the 4 hourly, like, wait, hold on the daily, you have a consistent level of support here. You're gonna have to break back through that. Yeah, we are, because the recession's coming, you know? So within that dynamic, I'm gonna re-encourage you to focus on your fire and ice, without a doubt. I'm gonna encourage you in every way possible in the market to go kill it every single day. If you have an off day, welcome to the club. It just happens, huh? You're gonna feel like that, like, yeah, you know, that move. And they're part of the great moves that the market has brought to us. But as you spend time refining your game plan, are we gonna hit this? I don't know. What is it? It's a target. What do we need to get to our target? What do we need to get to our target? We need a pattern to get to our target. True or false? True. Is that a save provision? Yes. Okay. The people, anyone who wants you to blindly operate between here and here, without conditional statements regarding probabilities and a risk there by when you come into deficient or outperforming probabilities. Anyone who wants you to blindly operate between here and here just on technical levels, you can see that we do get away with that to an extent with our cap line. Every cap line has what? Pay attention. What does every cap line have behind it? So many price levels. That at a level of sophistication, if you understand the cap line and what it's doing and the volatility levels and the consistent hits on these levels of volatility on Tesla, if you understand what's going on here and you have watched the video that I did on this at least 3 times, then you understand it, I would say fully and completely. Great video. I don't say that frequently, but it was a good video on what this is on Z-Pack Bollinger. If you understand what these are, then you have got incredible targets to deal with on another level that you're going to really be, guys, ahead of the pack in terms of explaining that to anybody. Rewatch that video if need be. It's a good thing. And I just want to reinforce that for you guys, because at the end of the day, what am I reinforcing right now? Is this a complaint session? Not at all. What is it? This is an open door to what? Realizing that we have been literally force-fed nothing but cautionary news every direction we looked this week. True or false? True. Where's the answer in the market? It's right with you. Fact, positive. And I don't care if you're looking at the Bloomberg or CNBC or the Wall Street Journal or Financial Times or the backdoor Red Rookie Discord server, whatever, guys, whoever. I care that you are able to filter through every amount of technological advantage in the market to be able to discern in and participate at a level that you are proud of, that you are excited about, so you can enjoy the market, so you know what it's like to win in the market. And the reason that you didn't, the worst thing in the world, well, I'm with the wrong group right now, I'm going to find the right group. No, guys, what a great group to sit here and say, no, you are going to be the reason, period. You know this. I'll never back off that. You guys know that. Just in terms of the dynamics in play. I want you, especially also, to filter just continually through, filter through this news. Quit listening to it. Because in between here, well, I just take it as a contraindication. I watch it, I take it as a contraindication too. Well, no, I'm watching this one. Actually, this time it's making sense this time. Guys, it's a media platform, right? When we start going sideways, what do we look for? When we start trajecting sideways, what do we look for? Yeah, Tesla, 30-second time frame, small moves. Agreed? Is it without risk, the 0.62% here along the level of support up to reinforced double bottom? 28 minutes, was that just a carefree move? Just big sigh of relief, completely carefree, right? Well, what did it do? It did compromise our target to the downside. True or false? As an absolute fact, it did. What did it throw us into? Heaven forbid we have another, and this is a great move. Heaven forbid you have another bull flag. Now, what's the problem with it that I don't like? Technically, you're up and over a rising wedge. So that's that little, it's a reality. That is what that is. It's just the fact. Experience just talking to you. You want to say cup and handle bottoming feature here. Pick up where? On breakout, who got hurt? People just pointing to the moon. Bam. Preceding resistance, flip to support. Copy that. Targets we have. Do we want to copy this up? You've got targets on every line we draw. Every line and every pattern we draw, you have targets, you have takes, you have max probabilities. And if you don't see that, I really want you to delve into the logic behind it. There we go. Do you like this pattern? Is it defective? Not this specific double bottom here that has its own set of targets. Where did we run into this yesterday? Differentiated. Yeah, we did. Differentiated breakouts. Okay, here we go with that pickup here. We're at the 50 into the golden pocket on said bottoming formation to the extent we have a cup and handle now. Differentiated targets. This was a crux, I think, yesterday on, was it NVDA? I think so. Now, this would be cup assured handle with higher targets, requiring a breakout. What do we want to look at? We want to look at any compromising features. And where don't we typically want to enter into a long on an expansion pattern? Typically, where don't we want to enter into a long? You know this. Here, on breakout. We just really try and avoid it. Where do we like to enter into a long? Here. Because who gets excited around here typically? Bears have a tendency to get excited. They want to push it down to the specific lower level of support. A beautiful move even when you can get it. Yeah, without a doubt. When we start digging into these lower time frames. And the encouragement here today is the following. It's nothing but the encouragement. Is to make yourself just as wildly proficient in the market as you possibly can. You are. Yes, you are. You guys are. I know that you are. You guys and gals, all right, are very proficient in the market. You just are. Are you trading? Yes. You don't have to trade big. It's not a trade big or go home kind of deal. But in terms of the opportunities in the market, if you are trading, just congratulate you. You guys are doing a great job. We're catching a lot of these primary moves. We really, really are. Our indicator suites are awesome, and I'm just excited that they work so well. Appreciate everyone for being a part of the success of those trades. Yes, in terms of their execution, etc. That is a big deal. Adam Smith style. Let's look at the, what else do we have? Now, when we start digging in lower, we just know this is just a different, bit of a different animal that we're digging into. On a lower time frame, what do I want to identify? Any lower potential entries? Yeah. Any additional trade ops along into and including? I dig down into lower time frames. Tesla 1 second, right? Literal 1 second. And gauging into these levels of consistency. What am I reminded of? I'm reminded of last Friday. Yes. Was that a light volume day? Let's look back at last Friday. And let's distinguish last Friday. Was that here? Where were we at Thursday? Friday. Here it is. This was last Friday. Let's pay attention. 7 days ago, last Friday on Tesla, okay, did what? Hit it. Let's watch. Boom, boom. You guys got it. Indeed. 7 days ago, Tesla just decided to ramrod this on low volume. True to form. So it took 7 days to really recoup that level, didn't it? Look at this. We're going to call it. It took you 7 days to recoup this. You got it. We wanted a re-hit here, didn't we? We wanted a re-hit here so badly, guys. Come on. Now, I'm going to challenge you. If you, and take a personal inventory big time on this, guys. If you could not help yourself but to hammer in for a re-hit at the level of preceding support, and you were hammering and hammering, guys, you just were hammering in this zone, and you just wanted that recoup move here so badly, right? You were so bullish on that thing, you couldn't let it go, right? And then last night, when I brought this, you didn't want it. If you hit this like a Mack truck full of just nothing but bull power underneath and got hammered last Friday, and then last night when I brought this, and said bulls will reinforce. They will. They were going to attempt to reinforce this overnight. Boom, bam. If you found yourself in the unfortunate circumstance to where you participated long under here and God forbid got hurt at all, let a stop loss kick and let it go, okay? What do we get into here? Momentum, big time, which is why we escalated some momentum features and made them a bit more visible for you all here, but you have them on your screen as well. I can only show you one screen really at a time efficiently. But if you wanted this so bad here last Friday, boom, and then a trajectory back into the same level here, and you didn't want this, begin to assess how you can better participate in overnight potential trades. And you may be able to apply that, not to equities per se. You may be able to apply it to getting a good night's sleep on Bitcoin, which is our mainstay. It's what we focus on. We like that, okay? This is a nice week-to-week viewpoint here. And I'm just really excited about all of your progress in the market. I cannot be more positive about that, more so than I am about anything. And I mean positive in terms of a conclusive, absolute, established fact that yes, I'm positive, I'm certain about that, but also positive in the regard that I'm very excited about it. And you all need to know that. Yes. And if I am running on about 2.5 or 3 hours of sleep, which I am, noted. Noted. California traffic and construction, not nice. So, where are we at? Where is our momentum? You guys want to see momentum on, let's take a look at our momentum tool and see how things are shaping up on Tesla. We see that 4 and 6 hourly engaged today. So bulls and bears got treated. If you didn't have the carryover trade, the most interesting thing about this is if last week on Friday you got hammered as a bull and then you said, I don't want that. Yeah, come on, get it. You got to go out there and get it, guys. You got to get that. Someone bring a bull flag. You want it. If you don't want this, come on. If you want this so bad as a bull in terms of a recovery move, but you don't want this, it's just you're gonna have a hard time explaining that to your kids after school. They'll be like, but hold on, Ma or Pa, you said that this is a bull flag. Why are you bull here? But the recoup moves can hurt. On both of them, technically, you're dealing with a 60-some-odd% probability, right? So neither one of them is really what we want. And as a takeaway on such, that may be fine. That may be a fine takeaway. Maybe you want neither of them. Maybe you only want your expanding volatility equations. That's at the crux of all of this on this move. Fire and ice, rocked it. But that was at the crux of this bottoming formation and a reason to enter. And I know you entered. It was a beautiful entry. Congratulations to everybody who entered. Boom, boom, boom. Nice move. That was the bottom pickup. You own the bottom from paying attention to this. True? Yeah. Nicely done. So, when we run into issues, what do we look for? Expanding volatility. Yeah? How can I not be excited when you guys pick this up? Boom, bam. I mean, how is that not exciting, huh? Even on 2 hours of sleep, that's exciting. That's awesome, huh? Rock and roll. So, what do we got here? So we have a micro, real thinned out bull flag. True? What is Bitcoin doing? We were going to look at our, by the way, exciting to see the NASDAQ pick up. What do we want to see on NVIDIA? We want the monster move. Yes, we do. We want the monster move. Everybody's looking at this. It would be spectacular. It would be absolutely phenomenally spectacular. Would it not? Yes. Who on Wall Street is jealous of a weekly green byline right now in the context of that and owning this? Well, I'm sure nobody, huh? I'm sure nobody, huh? You wouldn't go out to lunch and throw that around the table or anything, huh? Yeah. What do you think, huh? Indeed. Boom. You're noticing the market just doesn't make this all just real one-sided and easy the whole time, huh? Guy go out and brag about it. He picked up at the weekly and what? He got stopped out. No problem on a short. Maybe he's hedged in here. He's happy to have a lower entry on that. He just got into hedge on whatever he may have hedged into. Yeah. Just keep looking at this. Let's see, 4 hour. Let me go to this daily. That's what's not on my chart. I mean, tell me, same guy is picking up short on a hedge on the top pro line on the daily instead of the specific 20 moving average. That's pretty stout, right? That would be pretty stout, huh? Oh, okay, slow down, Tiger. You're going to hedge in and hammer in strong here because you knew we weren't. I mean, come on. That's tough, huh? That's tough to not hit that 20. So being a little coy, we appreciate the precision. All to say, if you're in money at any point in time in the market, my opinion is you have a decision to make. True. You have a decision to make in the markets anytime you're in the money. And again, start to assess that. Can you execute a trade in 5 seconds? Say 10 seconds, guys. 10, 15 seconds. Can you hold a trade for 10 or 15 minutes? Can you? Can you hold a trade for, 5, 10 days? Can you hold a trade for 5 or 10 weeks? Or 5 or 10 months? Can you? Bravo, 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 bravo. Yes, you can, guys. You can, you should. And that's going to be just a big part of the equation as you were to look at things. I wanted to look at the, let's watch this on Tesla bull flag and pay attention to the, went away from the right chart. Tesla bull flag, what are we on? The 3 minute. We have the 1 minute and 3 minute that are bullish on Kaplan. Let's go 3 minute down here. Let's take a look at this on the 3 minute, kind of assess these tools. You see this is the 20 moving average. Now, this is the crux. Let's pay attention to this real quickly. Real slim bull flag. In terms of that channel formation, truth? Yeah. Let's assess on, do I have that 3 minute real well laid out? 3 minute Tesla? Yeah, 3 minute Tesla. Let me even make this a little bit wider here. We'll spend just a little bit of time on this since we're building into this equation. And let's see what we got. Would love to see pictures from maybe the weekend. If you guys have anything cool going on this weekend, would be awesome to see. Any kind of fun going on wherever you're at. Would love to see some pictures. Would love to see what's going on with VIP. Noting an expansion. Look at this curvature, huh? Nice cup and handle. Are we picking that up on the other one? Just looks different, doesn't it? That's the same move. We just see it really nicely here, don't we? Without a doubt. Could be that the standard deviation lines here are kind of helping us view that. You just see that nice curvature, isn't it? So this is the line to beat. That's your breakout line for cup and handle. And for this flag type formation, Bitcoin overnight flew up out of a small bullish formation into a bit of a catch into our fire and ice, right, top pro line and golden short lines, to the extent that you have a bit of a challenge with micro patterns developing into more of a macro situation. Just pay attention to such. And let's watch a bit of this blue and red. We know what the blue and red is, okay? Now I've scoped this out in terms of the blue and red for the cap line so that we know kind of where the momentum is on Tesla for the daily, weekly, 8 hourly, larger time frames. They need to flip, don't they? Yeah, weekly we know we just pushed up above. Just pushed up above the weekly. Monthly held, right? Monthly held beautifully well, didn't it? Yeah. Let's see. There you go. Monthly held. Nicely done. Let's take a look at back over this chart. And we have a 3 minute target right now, which means we've crossed over the 3 minute Bollinger Band. We technically have this as a target, that 3 minute standard deviation to the upside. Okay, that's your Bollinger Band that's kind of hidden back here. Let me make sure I turn that on. See if I can turn that on so we can discuss this. I want to discuss this so we can understand what's in play. Now, if I'm going to make the Bollinger Band midline pink just so we can go through it. We can see this pink line. Here we go. All right. That's the mid-level of the 3-minute. We're on the 3-minute Bollinger Band. Now, we need to break out of this curvature and handle, okay? Where we're at is the 5-minute 20 moving average is right here. So bulls have broken out above the 5-minute 20 moving average and are just throttling on top of trying to hold and maintain specific price up and over that 5 moving average. So as we would look at an unfettered or a clean path to our 3-minute, meaning over the 20 moving average and a move to that standard deviation, that's your 3-minute simple moving average. Again, this looks best on big screen. Hey, J Mac, what's going on? J Mac, California in the house. J Mac, boom. My man, what's going on? Nice to see you. Boom. Nice to see you. Looking at the framework here, we're going to distinguish anytime we have a clear shot to a target, okay, a clear shot to, let's say, from the simple moving average to the upside band. Here we're looking at a breakout on Tesla of this curvature and handle feature, and we just know that along with this preceding pivot to the left, yes, we have this potential obstruction, could be a reinforcement of the specific 5 simple moving average. Now we see the 5 has engaged, right? That 5 has engaged, now has a target on it. The 3 may not have a target because I have this set to 50% right now, okay? I have it set to where across the 3-minute, you see that engagement on the 20 moving average, then we'll have an exit on the specific, and if I really dig into this, I show you guys this. If I dig into and put the labels in as, let me put them as normal, you'll see hopefully here, it'll take a second to wind itself through, pushing through that level of resistance, take it the preceding, but you'll see the 3-minute engage at the 3-minute crossover. The 3-minute exit right here at 50% to the way to the top side standard deviation. Cool, huh? You see here we've engaged, and this is rough. We're right on that 5 moving average. Let's say we're right, on that 20 moving average. But you see the 5-minute engage here. So the 3-minute entry was on this on the 3-minute time frame that we're on. We're on the 3-minute. So you see the 3-minute entry take at the 50%. Yes, here, that X. Okay, you're seeing the specific 5-minute flex with the, are we over, are we under? Establishing target to the upside, to the downside. And you see the 50% come into play in that it happened to be the actual 5-minute 20 moving average. And then when you look at one time frame, this all becomes kind of difficult to really appreciate. If you really know the tactic well, you know exactly what's being discussed. It's kind of cool. Now, as you look at the, let's look at that breakout zone, which frustrated, yeah? So this would be a preceding 3-minute, take of the 50%, 3-minute, take of the 50, 5-minute is struggling to say the least, right? We need to break through this level of resistance. This is the trade we're looking at engaging in. You ever want a breakout trade? Not if you can help it. There are some times, guys, sometimes in a year where, or within a 2 to 3 time period, a year time period, you can't miss it. Every breakout is trading. Even during those time periods, what do we know? It's like, well, even during those time periods, you still are getting, you're getting still in line with some probabilities, right? Some probabilities you take note of. Even in just a voracious bull run, you're still in the mix of probabilities. If you don't respect those probabilities, you're still going to get hurt, without a doubt. So, and this is going to demonstrate well the problems we have and the variability component here between, let's say, breakout of a potentially bullish pattern okay? Holding of a 20 moving average. What's the degree of flex here that you would want if you want to achieve a hit to the top side band of the 5 moving average, which is a 0.58% move? How much flex do you want on this 5? Okay, how low do you want in order if we're flexing all the way down 10 cents, right? To pick up orders, let's say 10, 15 cents to make up $1.67, $1.70. That specific question is highly relevant as you look at your upside targets, as we consider what are the hurdles towards getting to those higher targets. Let's see if I can labels, pardon me, shift 1, 2, 3, 4, 5, 6, 7, 8. Let me try this real quickly, see what this does on shifting these arrows. I just want to see them. Maybe that's already calculated. Okay. Now I may just take these arrows off real quickly. The arrows typically are going to show us where we're situated and what types of targets we have. Now, that's a big one. We need to clear that 6-hour target. Fact on, check it, guys. Just check it. We need to clear this 6-hour issue. We have technically crossed over and hung up on the 6-hour. Who's been watching the 6-hour? I don't know, guys. What are all these probabilities here? I don't know, guys. What's the highest probability that you see? I don't know, guys. What's engaged? I don't know, guys. Nice hit on the specific 6-hour, 0.77. Noted, we don't look at it very frequently, do we? No, we don't. But it's relevant. We just have to turn your back for 2 seconds and then she'll move, right? Sometimes. So this is the, guys, nice move. J-Mac, I don't know if you missed this. I only got a couple hours of sleep. A long, frustrating day on the road yesterday for in the car for like 8 hours or something. I don't know, typical California mess. Re-exploring last Friday, this port of the downside and just questioning, did anyone hammer into this underneath like a bull with a mission? Had to hammer it, never got the return. If you did that, if anyone did that, not you, but if anyone did that and had to be a part of that bull move and then didn't want this one, yeah, last night that I brought to you guys, I said the bulls are going to reinforce this overnight. And yes, the bears are going to reinforce everything the bears are going to do, but if you found yourself being compelled to absolutely hammer into this recovery trade that we had last Friday, and then this Friday you decide, I don't want the bull flag. I don't want the bull flag. Just get consistent with it, right? Fair enough. Nice Friday week ending kind of lessons, huh? Just to reflect on. Not bad. So we need some momentum, which is why we were back over on this chart. Let me go ahead and reframe back into. Now we're showing bull across the board on lower time frames. Let me see here with the up through 15. I need to check that. Let's see, 15. Let me take one move here. This is a lot of detailed work here. Let me see this on the 15. So the 15 is showing, this 15 is showing, and I had this off a bit. I have the Tesla as now the 3 minute, the 5, this should be the 5. We've been running around with different charts. 3, 5, the 15. This is going to be the hourly, the 4 hourly, which engages nicely on that 20 moving average. We have the daily, the weekly, right on into it. Let's see, a weekly, a monthly. Nice pickup. We have the just the credibility, the credential here in terms of that weekly NVDA green buy line. Boom, boom. That was a slam dunk of a hit. Nicely done this week. Oh yeah, very, very nicely done. Now, next week, what does this mean? Next week, we're going to have a shifting 20 moving average. We're going to open up, and this will have moved. We can see the trajectory of it relatively well, but we're going to open up, and that's going to be different. We'll try and close out the market here a little bit after a while. Let's take a look at NVIDIA. What it's trying to reinforce right now, this is a tough level, but inverse head and shoulders, along with that rising wedge. Not clear cut. People got rewarded on the Friday after they got scorched last week on Tesla on that head and shoulders lack of a recoup. Yeah, so now it was time to throw a bone to the bulls. NVIDIA, 4 hourly green buy line on the weekly. Sorry, not 4 hour, the green buy line on the weekly. Bam, gave that low. Nicely done. Thereafter, a few different opportunities, including yesterday, to pick up into a specific trade. And I just discussed for a while too, and you guys know this, just to recap a little bit. If you wanted to be a part of a bell pattern, bam, nicely done. Nicely done. That was an overnight trade though. May not be real pretty on those. At some point, if you want to trade, just understand, at some point, if you want to trade this pattern from here to here, you're going to have an overnight trade. That's just going to be a fact of it. So even from the 4 hourly, I keep saying that 4 hourly. What am I hung up on with NVIDIA on the 4 hourly? I do not know. We had an entry on Capline. Part of that transition and framework. That was nice. That was near the low, wasn't it? Not bad. Not bad. Looking at the daily as well. Daily, a little bit less of the 4 hourly played more aggressively. Got you in lower. The daily still got you in. Pinpoint precision yesterday. That was a beautiful play, wasn't it? Nice yesterday. Open up, just boom. That was a nice day. We have to look at that. I'll have to look back at those details, but that was a nice, I recall that being a very nice pickup day yesterday. Yeah, it was out 3.27 right now. You're sitting at, from that pickup on Capline on daily. That's sweet, guys. It's nice, maxed out at 4.7%. Not a huge amount of volatility, but we just are seeing nice levels of volatility consistently. So we like that quite a bit. We like it. Tesla is getting a reward for the longest frustrated breakout in in a volatile assets history. Just couldn't make it much more uncomfortable to sit and just ask it if it wants to do something in a certain direction. We get back to the specifics on momentum as a fact. We get back to, and I'm working on one other aspect of this, and if we can complete one more aspect on this, it's going to blow everything out of the water. It's going to be a rainmaker, guys. I don't know. It's going to be a rainmaker. Hopefully you guys like this so far. You understand that red and blue. I can change it to red and green and red, etc. This is over or under. So we're over the 20 moving average on the 1 minute and the 3 minute, but we're down on our momentum on the 3 minute and 1 minute. Your 1 minute looks like this. Your 3 minute looks like this. Okay, so you have to double clutch on this. Your 5 minute is rounding to the upside, so that 5 minute is blue. You see that reflected in your chart here, that 5 minute going to the upside. So that's bullish going up. There you go. That 15 minute is bearish. You see that falling over? And that's on NVIDIA versus Tesla. Let me look at Tesla. Come here, Tesla. 15 minute. Apologies, these are too close together. So we see the fold over on the 3 minute. We see the rise up on the 5 minute. We see the fall on the 15 minute. So we have bear, bull, bear on the 3, 5, 15, right? 3, 5, 15, bear, bull, bear. Yes. Okay. Capiche? So flat top on 15 noted. Let's dig back into and that's starting to look a little bit hairy. Let's see. So bear, bull, bear, do we have confirmation? No. Do we have, let's see where we're at on hold on. This is not bad technicals for us to unwind. We have an overriding push on potentially the hourly, right? We are bullish on the 4 hourly as well as we're trying to roll up. The hourly's rolling up. Do we have a consideration on the daily is bearish on the daily. So we have a lot of conflicting momentum overall signals daily, weekly dropping as well. Daily and weekly need to turn. The 4 hourly has turned, the hourly clearly turned, and the question is, will it sustain? We are at a level of consideration being over a rising wedge, which is of concern to the extent it's holding back programmatically or otherwise the participants in the market. It just is noteworthy. Anytime you're over a rising wedge, more pronounced on lower time frames, it's a difficult area to operate. And with that said, we've just dug in to try and get a handle on this specific pattern as it may be able to maintain. The bottom line is this breakout level, right? Right on. So can we set a candle? This is the question. Can you set a candle up and over on the 5 minute, please? She can make you ask that question for an hour, huh? Look at this. 20 minutes, huh? For 20 minutes trying to set a candle up and over. Noted. We like clean candle sets, like up and over or down and underneath the specific 20 moving average. We like clean signals where the buyers can attempt to enforce a bullish position. Bam, hammer in with some expectations. So a little bit of a grind sideways, opportunity to talk about the move from last night. And it's, guys, if you didn't, it's no big deal to me. I mean, do you think I would honestly care one way or the other? When I bring something up, listen, when I bring something up like, look, last week, last Friday, it did this to who? It did this to everybody, guys. It did this to the planet, right? Bam, to the downside. So when I bring this up and I say, did you find yourself hammering in as a bull in this zone and just got annihilated, right? I bring it up because if you did and you were overly zealous then, just pay attention, because this was a bull pattern, at least for purposes of the distinction between, okay? Let's say, first of all, for purposes of having hit the target to the upside, yes. The apex for the failed wedge, boom, bam. Having actually recovered, what a week. Having actually recovered this awful breakdown, boom. It just wasn't on anyone's mind. I don't know, you don't want to carry that down, but as you would look at it, it's just like a whole week went by. It's like you were thinking of this never recovering to this point, right? How much did it go down? Let's look at this. That was a 6% drop. Impressive. Week later, we recovered to that nearly precise zone. Really the pivot, shoulder, top to the left. So I just encourage you to look at your operation in the market or your participation in the market. And what is it telling you, right? Low volume, huh? That's why I got obsessed with momentum. I'm like, what am I going to do? I'm going to put this all over the place, huh? Yes. Air raid siren, nuclear air raid siren for dropping momentum on the lower time frame so that we are assured of it. Tough to see, maybe. Let me do this. Let me do this and try and clean up a little here so we can take a look at what's going on. The 4 hourly hit, the bears are just sitting there loving life today. Sure, you got the bull flag move, but the bears piled into the 20 on the 4 hourly, and they're going to sit there and keep talking about the recession. It's coming. It's coming. right? So we will make some additional progress in terms of, I will, okay, this weekend in terms of the presentation of the technicals for you all. And I really just want to encourage all of you. And the only reason I can do that is because you guys are just so awesome at interacting with the market. It's really awesome to be around you all. You're very proficient, and I take a lot of guys just, I don't know, I'm excited about being able to be around you all because you're very technically proficient. That's the bottom line. I feel very fortunate to be able to interface with you as such. We did not get a candle set up and over that dividing line on the 5 minute, did we? Negative Ghost Rider, the pattern is full. She wants to push around. Back to cap line. Just tight action. Huh? You're going to push back to cap line on the 5 minute. You see, it's just typically, and this took a while. What is she just beating it out of? Honestly, Tesla's just beating it out of any trader who didn't want this bull flag yesterday. Because we closed and it was perfect, wasn't it? It was just a nice bull flag. There wasn't really anything wrong with it. We had maybe some momentum issues or otherwise. We were closing on that. But she's just doing this now. She's like, yep, and you could have made this money in what? In 2 seconds. Cha-ching, bam. True, huh? Yeah, so she's working with your time right now. Yeah, huh? She will do this. She likes to do this. Where's that momentum, huh? Swinging up on the 5 minute, true? I believe so. Let's see if I can pull this around on the 15. Just pop through that, huh? A little bit of excitement. I mean, you don't want to entice the bulls to enter in here, like the Johnny-come-latelys to enter in and go for a big upside target, and then you just engage in the shorts and hammer them down through the ground. I mean, come on, huh? I mean, they should look like they know what they're doing. That would be, that'd be a classic move. It would seem, it would seem to be. Let me get a sip of water real quickly. So what are we looking at? We've got momentum issues on the 3, 5, and 15. The 1 minute I don't pay attention to. Okay, the 5 minute, the hourly, the 4 hourly, and the 6 hourly look good. We just got a mixed bag, huh? Conflict. So 15 minute, 5 minute. I mean, this is just it, guys. Why do I like the quick trades? Why do I like to get up, to get with it in the market? In the first 3 to 5, minutes, it's over, right? The first, hopefully 10, 15, 20, 30 seconds, it's over. It's all right. I mean, these are some opportunities. But you're going to spend an hour refusing to set a candle up and over this line. What is this, 252.07, huh? Yeah. Tesla, that 252.09, huh? She can't do it. She won't, huh? She is refusing. See that cross under in the 5 minute, which did stick down with a take at the 50%? Just note it. It's been all over these lines. But as you look at a potential for short here with a take at the 50% target, you say, well, it's just grinding sideways. It didn't really offer an opportunity except for a candle close below and a take at that specific 50% threshold below, as you measure from the 20 moving average to the standard deviation to the downside to the upside. Yes. And so she's reinforcing this fact. Could have had it last night, didn't want it. Now you're over a rising wedge. Huh? Just baiting, isn't she? She's really baiting the traders. What do we have? We have some expanding volatility, right? We really like that handoff from resistance, support, resistance, don't we? We do. Now we had this here. This framework here had it, didn't it? Yes. That had it. And we started to develop into a bit of a framework of a channel. This channel tool has just gotten ridiculous, very difficult to deal with. I don't like how it really projects part of your, I just wish it were a little more understandably applied. That would be nice. Forgivingly applied would be nice. Now we're on the lookout and hunt and march for anti-topping formations. Indeed, to the extent that this would want to become aggressive to the downside. This is the bears locked and loaded, ready to pull triggers to the downside. You guys got that with any type of a topping formation. We were prepared for it here on the micro, right? Find any potential central pivot, bam. We have that technically here, sure. Just always project into those patterns because they're not always immediately available. Let's say just immediately apparent. You have to make and go that extra mile to consider them, right? To have them fit into your trade sequencing in terms of pattern considerations, etc. Looking at this target, this is one question. Are there orders at this level? We know for a fact. You can go look at an order book, go look at one. If it's telling you that there are no orders at this level, then I'm going to argue that you're wasting your money on whatever said order flow, order book. I mean, guys, there have been orders at preceding levels of resistance on every breakout trade that we have had for the last 3 weeks. True or false, guys? Now, you've had a few that have pushed below. How many consistent trades have we had at preceding breakout levels? Good gosh. The last 3 weeks has been just full of them. If you're not doing that right in the market, I feel bad for anyone who's not doing that in the market. It must be miserable, right? If you see a breakout and you're chasing it, my gosh, huh? You're just not in the market. The bottom line is you're not going to be in the market. I mean, honestly, the way the technicals have been working, it's just not going to allow you to stay in the market. It's going to just really, really, it's going to hurt if you're trading every one of these on breakout. And for instance, this traded well on breakout overnight. It did. And the majority of the breakout patterns that we see that have traded, we are seeing a bit of a flex maybe to the 23.6, maybe 38.2, if either of those with recoups back down onto preceding levels of resistance. We just are. And it's a nice level of consistency that we're seeing. The big, ooh, hold on. What was this? It's Tesla? Yes. Whoa. Where is our handoff here? Hold on. Where is our handoff? This is Tesla. Resistance, support, resistance. Where's our handoff? Come on. I know everybody wants Tesla to go up. So do I. But where's our handoff? We want 1, 2, 3, 4, 5, 6. Boom. Yeah. 1, 2, 3, 4, 5, 6, 7 is permissible. 1, 2, 3, 4, 5. Bam. 1, 2, 3, 4, 5. Bam. 1, 2, 3. Okay. We'll play some different patterning. Where's that handoff? We like this handoff, guys. Percentage probabilities. Problem is the time it takes to get down there. But you know, man, don't you know? We all know. It's difficult to look at. This specific amplitude move is 104%. The same amplitude move carried up, let's say here, is 60%. Man, you went from 105% to 60%. Don't do it. Don't do it. 42%. All right. 105 to, guys, the 60 to 40 to, I mean, you're losing your comparative advantage being at a lower price or otherwise. So we appreciate lower prices, especially if you can get there quickly and rebound, preferably even quicker. How about that? I think we can all agree on that. If you can get there quickly and rebound even quicker, hey, seeing the 5-minute standard deviation on Tesla engage to the downside. Five-minute showing technical divergence thus far until we were to, or until such case that we were to roll over in terms of a momentum shift, right? And this is never necessarily comfortable. Well, we're heading to the upside. Well, we're dropping. Okay? So what comes into the picture? How do we explain this? How do we explain that we are heading to the upside and bullish, and we're dropping? We're dropping here in price while we're heading to the upside. A few different considerations. We're not green, first of all. We haven't crossed over this mid-level threshold barrier. We haven't, right? One consideration. Is it relevant the fact that we stood here for an hour and a half and tried to break a certain level and couldn't? Quite possibly. We stood here for 50 minutes, okay? 50 minutes, and couldn't set a candle over this level. Reinforced level of resistance without a doubt. Is it relevant to the equation that we have a target to the downside? That we're over a rising wedge? Should we be typically on, and it's not a well-constructed rising wedge. I'm not crazy about the roll-in feature, that handoff. I like a direct power in, resistance support, but it's there. NVDA gives us a little insight on that. True? Yeah, NVIDIA giving us a little bit of insight into that in terms of it's nicely formulated. I drew this inverse head and shoulders just to kind of wake everybody up, because we can trade these like this, it seems like, for a really long time consistently, can't we? Just don't get used to this every time, please, right? Rising wedge, careful over the top, boom, okay? Just don't start hammering in really heavily up and over a rising wedge here on top. Have some other sort of confluent level of interaction that you're relying on consistently, some other dynamic other than, well, we're up and over a level of resistance. Particularly on a lower liquidity item, this will hurt you. Pay attention, it will hurt. If you're on a lower liquidity asset, this will hurt, i.e. a crypto that's off the map. They will love to put you through the ringer up in here with a short, bam. Make you pay for it, right? So NVIDIA's, remember this specific, this flow here was nice. Partial move down, then that re-hit, resistance support, handoff, bears, bulls, bears, bulls. There we go, up and over with that target completion. Wedge tactic, way to go, bam. And we should shout out to Sophie. Sophie is quite possibly the youngest and potentially most successful VIP that we could possibly hope for. That would be Venus's daughter. She is an avid up-and-coming trader, and she's in high school. So, Sophie, we hope you are doing well. We hope your mom's doing well. Venus, we hope you're doing well. And I just wanted to shout out to Sophie. I have a book here for her. Need to get that in her hand somehow. Forgot about that. In terms of, and guys, family from Luke, hope you and the fam are doing well. J-Mac, you're always traveling around doing some family vacations. Steve-O is always doing some family vacations. I don't know who else is involved in family stuff. You guys let me know. AJ Crypto, of course. He's a stunt double, I think. Stunt double, I don't know, whatever you call it. He goes out, wild skis, former Air Force. He goes out and skis and shows his kids up, all kinds of stuff. Longest ending VIP member. You guys have any pictures or anything else you'd like to share in the back, in Slack, etc., let us know in Slack. That's our DM. And if you're not in that DM and want to be, let me know. Support trying to hold on Tesla here. The whole notion that it's support until it's not support is the worst way and the best way to look at price action. I'm just going to tell you, support is support until it's not support. We had lower orders on NVIDIA, but support until it's not support. Now, the problem with the NASDAQ, yeah, but we broke support. Yes, we did. We want to call this a blackjack. We just do. If we frustrate and pan off here towards the afternoon, let's do it again, guys. Let's do this again next week. Why? I want to see this play out between the Bulls and the Bears. I want to see it. I don't mind if we hang out in this zone a little more because they just took a bunch of the Bears' money big time. Big time, huh? You know they did. It's not nice. That sounds like I want them to take the Bears' money. No, I don't. I just like the fact that we just nailed, absolutely, just power drove into this weekly green byline on NVDA. That's nice, guys. That's a nice feather in the cap, in your cap. Huh? Well, maybe you scheduled a short in around it. Maybe you hit multiple shorts. Maybe you shorted the heck out of the market this week. I would love to hear nothing more. I'd love to hear nothing more. Man, London, you don't get it, man. I hit into, check it out. I hit into the green byline on the weekly, right? And then I hammered into the 20 moving average with my shorts. I held my green byline on the weekly, and I just annihilated this 20 moving average every time it engaged. That is cool. That is what's up. And then the final question. Don't tell me that you hit and rocked the bell to the upside. You guys call it a flag, it's fine. But when a flag frustrates, people won't catch this. They'll be real frustrated, like, well, the bull flag's not acting, it's not behaving properly. Well, that's fine. We're going to define this as increasing volatility, okay? So as you would look at this, tell me after all of that, okay, Mr. Anonymous, like I hit into the green byline, I hit it on NVIDIA, I caught the bottom, essentially I caught that bottom. Then I shorted into every single hit on the 20 moving average on the weekly. I nailed them. I just completely nailed every hit. And then my final question would be, all right. Now, did you rock the bell from yesterday to today? Did you hit this bull flag on Tesla and NVIDIA? And if you were to say, of course I nailed into, of course I hit those. Of course I hit those. Don't say I doubled into those in addition to my weekly downside position. No, and it's a great point to discuss. What's our common rule that we even float around as a hypothetical, guys, that you might want to apply? Who knows, hypothetical. What is it? Whatever your downside interest is, do not exceed your downside interest in any upside trades. Do not increase your level of exposure beyond in any upside move, your downside primary carry trade position. Man, if you can do that, you are golden, guys. It's taking a while for this to play out up and over that rising wedge. It's why we don't like them. Let's look at Tesla. What's Tesla doing? Tesla, what are you doing? Tesla is hitting our target. Boom, 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 boom. Indeed, right? Hey, bravo. Congratulations. Hit it. Come on, hit it. Within threshold, we can call it. You guys want to call it within threshold? You're a couple bucks off, huh? We will say that's within threshold. We still expect a complete hit, but you're 20 cents off. We're going to give it to the 20-cent guy. That's a target hit. We'll say within threshold. It's not an exact target hit, but it's within threshold, right? And if I really want to get exact, I'm like, well, actually from here, to here. And I like to leave my original lines. I just do. Because I'll draw it on a different time frame, not bring it over, etc. So, hey. How many times do we have bullish patterns over a specific top of a rising wedge? And we learn a lesson that someone likes to talk about all the time. Do not be engaged in bullish patterns up and over the top of a rising wedge. True? To form. Just be careful. Ay. Nice to see it work out. And yes, we are, what are we at, guys? Over 3 hours. We're working 4 hours into the trade day. So these are the types of moves you get throughout the day. And you might say, well, okay, I'm up, out, and over. What's my target? Your target is this. Your target is calculated, and I say this all the time, it's defined in the market. It's literally calculable between the levels of resistance and support, literally $249.50, $249.50. You want to set a target and a take, and bam, that's it, good. You did it. You have orders that precede the level of resistance. What are they compromised by here? What do your Fibonacci say in addition to your structural patterns? And what are you trading? You're trading Tesla? As you're trying to pick up on a 23.6, how's that working? Consistently. Not all the time. When we lay these out, they become difficult. And I'll lay them out, but you guys know they become difficult. They want to push around, throttle. So you're on the 23.6. Guys, Tesla has so much volatility. If she were 100% consistent, technically, it would be too much money. It's the same thing with Bitcoin. There's so much volatility, in my opinion. If it's too technically proficient, it's just too much money. I mean, you're going to be talking about excessive amounts of money. I know it's a big problem for all of you. That's why we spend all this time, right? But honestly, I know it's a big problem for all you guys. It would just be too much money. Who knows? A little bit coy on NVIDIA, isn't it? Yes. Look at that. Just hang a candle on that cap line, huh? Yikes. Might as well. Let's take a look at the. So Tesla, you'll see these gain and directional strength as we work our way down, right? Now you'll also see us engage in additional targets on the 15-minute as that is crossed. 15. It's going to take. This is just purposes of demonstration. We have a target on the 4-hourly. 4-hourly, we're underneath, and we're showing bullish right now. Let me go to that 4-hourly so I can assess on Tesla. The 4-hourly, we're going to show a target underneath, technically because we've crossed back under. Now, this is the question to discuss and to bring up. Please cast aside every misgiving about the market, trades you hit today or didn't, the entire week of what occurred, whether or not you hit the bull flag, whether or not you hit last Friday's versus this Friday, versus whether or not you agree with anything I've said all day. Cast all of that aside, okay? And focus on the following issue, please. Now, as you were to assess a generally bullish dynamic of the market as being in an upward trend, yes, price action likes to or tends to, let's say on the daily, tends to reinforce along a 20 moving average and to operate between the 20 moving average and the band. Okay? Verbatim, nearly. New York Institute of Finance, you got it. So, the coding, pay attention, the coding is set right now on Tesla. Establishing a 4-hour target to the downside is what? Pay attention. Because, throw everything else out, guys. Because we expect in an uptrend to operate between the specific 20 moving average and the top side bands in an uptrend or in a downtrend. Downside band, 20 moving average, downside band. This is built for, and targets are built for what? They are built for a trend. So the fact that we have crossed back over on the 4-hourly, you guys got it right, on that 4-hourly, the fact that we have established a new target to the downside, bam, is because we essentially came into contact. We pushed with, but we've come into contact. So this is how I programmed. Now our target is the downside band. If and when you see that on this chart, like, hold on, all we did was touch it, man. We barely touched it. We're heading back down here. It's built upon a trend following maxim in the market that, for instance, in an uptrend, we will establish contact with topside band, moving average topside band, moving average topside band, You got it, guys. So if it's bottom side band, moving average, bottom side band, here's cap line, bottom side, cap line, bottom side, cap line, bottom side, okay? Literally, bam, 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 on daily. So it's built out of a trend recognition that we would look at and want to reinforce that as a target and say, well, it wasn't an official crossover. I disagree with that. Just understand that's the rationale behind it, okay? Not haphazardly established. We concur. Hey, how is your short? These take a while, huh? These downside targets just feel like they take forever, huh? You guys know that? When you're trying to return to a preceding flat top resistance, my goodness gracious, huh? And some of those, you just sit down at your computer, I know this, and you're expecting it to go the wrong way only when you go sit down at your computer, which is what? Which is perfect. Because why? Well, because you want to short higher. Am I right or wrong? Yes. So you're excited when it's moving away from the target when you go to sit down. You can view that as, well, every time I sit down, it's not even going down to my target. No, it's going up, so you can short it. In a perfect world, right? In a really simplistic, perfect world. But glass is half full. No, that glass is half empty. I don't know. Try and flip the script. Definitely looking at the positive factors of the market. You guys got it. So we've known about this level all day long. What is that on Tesla? Oh, yes. Oh, yes, that 23.6. What 23.6? That's just Tesla. You know this. You know this. Level of support dynamic. Great week, huh? Great week trading. Really feel like it was a phenomenal week trading. Venus, great trades, huh? Great trades. Great price action, huh? I was excited in traffic, everything else. Yesterday I stopped at a bad gas station, huh? Not bad, but just, you know, seedy types, dark, Los Angeles. And just sitting there and just powering through the charts for you guys yesterday. It's very important. Very, very important. Got to catch those moves. We caught them too. And nice price targets. Nice price targets. We nailed those targets, huh? On the move, huh? On the move. So looking at target, bam, nice hit, nice level of engagement. Last Friday to this Friday. Now, what did we learn? Oh, don't ask. Do not ask. What did we learn last Friday? Now, here's the question of the day on Tesla. Anybody up for a recovery move to the preceding breakdown? Huh? Everybody's, yeah, I need some rocket fuel in the form of momentum, and I'm all game, right? You have to consider this a nice dynamic, isn't it? Really nice dynamic. She just powered through everybody. Everybody going for a gap fill here? You want this higher level? Gap fill being where we left off yesterday to, guys, this specific, this is the breach of the day's price action. You going for the gap fill? Or do you want to pick up? Let's see where we're at on some additional time frames. Let's see what we have in play for Fire and Ice. Upcoming hourly. Can you trade just on Fire and Ice and cap line? Yeah, and 20 moving average, and you got it, guys, without a doubt. How's that 4 hourly 20 moving average? How'd the bears do today? This is the best thing of the market when you say, I don't want something overnight. Okay, they got paid. They take that risk. They can't sleep. They're up pre and post market, or post and pre-market, and then into, you guys know, into what? Into now it's time to trade. Bam, on the 4 hourly 20 moving average short. Nicely done. Nicely done. A daily, a little bit coy, huh? Look at that. Off the cap line and the 20 moving average. I do not want to say I have another set of cap lines. I don't want to say that. For whatever reason, it is true. I'm working on that. I have another set of calculated cap lines. So anyway, that's irrelevant for right now. For the purposes of today, that's irrelevant. Looking at this, but note such, huh? You're welcome to get me in the back Slack room and interrogate me on that question. regarding having an additional set of cap lines in play. I don't want to go that route. I do not want to go to a separate set of kernel calculatives, really trying to avoid that, okay? So technical target on the 4 hourly is downside band. D'accord, right? Yes. And don't tell me, don't do it, huh? Do not do it. If we cool off today, you guys want to do it again? Now the bears are sitting there saying, cracking their knuckles out. That's right. You see, and they're telling everyone the issue here on the daily is the flat bottom support. Yeah. Well, what we're going to want to do, they're telling everybody at their dinner table, right? What we're going to want to do is reinforce this flat bottom support here, right? And we're going to want to reinforce it as a resistance line. Can't you guys just hear them, right? Oh, gosh, huh? A recession is coming. Like, oh, my gosh. Everything's closing. The recession is, it's just, come on. You know, I can only take so much of that stuff, you know? And you see it in play, huh? You see it, huh? Now, what do we have? These poor, unfortunate souls are what? A little bit stymied up with, where is this? Yeah, 5 minute is screaming at them, huh? It is screaming at them indeed. Why? Amidst this level of preceding pickup, it's just a flat top resistance. Yes. Flat top resistance, this hourly is doing what? It is screaming at them. What? To come down here. Why? Because there are orders, right? This is your level on the NASDAQ, right? It just is. And it'll get there and then we'll casually say, that's a move we see commonly in the market. True? Indeed. Just lay that out. We got nice inverse head and shoulders. Blackjack on the hourly, up and over. Tagged, yep. Noted. Noted, huh? Blackjack indicator incoming, huh? Blackjack lightning, huh? Lightning, and I also have the neon version. That's cool though, huh? It's just something, guys. It's not fancied out yet, without a doubt. It's not designed out yet. Potentially incoming, maybe 2024 will be the year of the blackjack. We got to trade that on NVDA, huh? That and Skywalker, huh? You guys want to trade Skywalker? You got to be careful on Skywalker. Huh? Skywalker is the way to go. Hey, Venus. What happened, huh? I got to tell you guys what happened. We had like 5 or 6 people, huh? This is just funny, huh? We have like 5 or 6 people, 6, 7 people. What happens? This is so funny to me, guys. Tesla decides it wants to break down and do what? And hit our target. It's just funny. Why? Why is this funny, guys? Honestly, because this is just the way it is. You know this already, and you specifically in this room know it, is what? Well, Tesla decides to fail the bull flag, but operate in conformance with the vast majority of times you're up and over a level. It's just, this does it every time, but I mean, we must have had just the half group of everybody in here. Yeah, but this time it's going to beat it. And when it doesn't, everybody leaves. It's like, yeah, but I mean, none of you traded to the target. You know, that's the problem. None of the people. Guys, I've seen this work with like hundreds of people at a time. Literally hundreds and hundreds of people in the room at a time. And I'm just like, well, there they go. I'm like, none of them, not one of them wanted to trade to a target to the downside. It's just phenomenal to watch it happen. And so when I see it happen in between, say, 5 to 7 people, 8 to 10 people in a room, and just 70% of them will leave when we drop to hit our target, I'm like, man, that's just ciao. You know, see you later. It is what it is. But we see that with frequency, don't we? You guys know this. It's just funny, huh? I mean, the price goes down and people just leave. It's just, come on. We have a gap fill below. We have a frustrated pickup level here. We are on a green buy line and the bear trade of the day. Now, in terms of actual trading today, from the carryover last night of Tesla's bull flag that I brought you guys in the back, yeah. And you know I'm going to say that from now on. Understand, I'm going to say when it's apparent like this, I'm going to tell you when it's clear and obvious, when it's obviously, clearly like a bull flag, the bulls are going to reinforce this overnight. Meaning you're a bull, you're in that trade from last night to today, period. The bears are going to do what? And the bears are going to try and reinforce a topping formation. That's it. Between the carryover traders from the night to the next day, you guys got that, right? Just is what it is. But when I say that, pay attention because there's a clear pattern in play. Bottom line. Doesn't mean you have to take it at all. Especially if it stresses you out. You don't need to be stressed. You need to enjoy the market, enjoy your profits from the market. That's the whole idea. So we got the move to target, which I like. We also got what? The breach of the level of support on the rising wedge on NVDA. Yes. And on Tesla. Yes. NVIDIA. Bam. Through that level of support. I wanted to see that. Okay. On the rising wedge. Tesla through the level of support. Trying to hold. But yeah. Bam. Nicely done. Where are we at on this topping formation? We're just a little gun shy on Tesla because she overperformed on that head and shoulders last Friday. True on that kind of sell-off routine on light volume. I don't even want to look at the volume today. I really don't. I won't. It's accurate or inaccurate. It's not going to be a part of our. It's just not, guys. It's not going to make the cut today. We learned our lesson last Friday. It's been very inaccurate. So high volatility, maybe different programming ongoing, maybe some different, maybe some exceptions in terms of the normal volatility to volume correlatives or expressions, right? Looking at that framework, we're at that golden pocket, trying to pick up at the preceding level of resistance, flip into the attempted support. We have a downside, and just in terms of the multiplicity of things that you're viewing on the screen, understand that the complications are needing to be discussed so that it is easier to differentiate immediately when there's no discussion needed. When everything is straight as an arrow, when there's no complications and only confirmations, everything in the same direction, no need for a discussion. But when there's no need for a discussion, and you understand all of the detailed intricacies of the dynamics in play, to the extent that we continually discuss them on a differentiation or correlation basis, right? Then, and those are when you can make the good decisions. If you're not able to realize an instance of just absolute agreement and confirmation in the market in a very unique setup because it's not complicated and it's so straightforward and you have such agreement. If you can't just process through the dozens and dozens, bam, of checklists of things that could be complicating and aren't this specific trade, and you go through your mental Rolodex of problem situations that you could have or whatnot. Yeah, when you, whatever your file list is of problem situations or lack of confirmations. The issue is we discuss the problems, the multiplicity or conflicting of targets. We discuss all of this continually so that when the go-getter trades are sitting right in front of you, it's just automatic. And you've already assessed and you're able to assess all the other dynamics and technicals in play that are irrelevant, that make this the proper trade. But they only become irrelevant once they only become irrelevant once you're able to dismiss them properly through hopefully some, rapid fire level of consideration and analysis, right? You understand that, but it's one of the most important aspects in the market is being able to very quickly analyze. You could say, well, this is just a lot of talk about nothing. This is a lot of talk about, well, you got an upside target and downside target. Isn't that nice? No. It's highly relevant to the extent that when we have targets to the downside or targets to the upside we're able to distinguish, guys, which ones are, let's say in terms of probability, we're going to know. We have some assistance on this. Which ones are going to be more likely or probable to execute, and then we're going to be able to differentiate that they're in at a much more critical level, where you're going to feel more comfortable trading. And to the extent that you haven't gotten to that point yet where you're really more comfortable trading on, let's say, some really highly confluent moves, just give it some time. Continue to work on your technicals. But that's a good goal as we would consider such in terms of not being overly complicated, but really being able to understand what all is in play. Hourly, 4 hourly, 6 hourly, still showing positive dynamic. That means we have targets below on that hourly, okay? On that hourly, that means I have some targets below, okay? Here, particularly, I'd like to come into contact with this specific 247 or so. RSI, stochastic, and MACD indicated momentum level, volatility momentum level here on the screen, all right? So that's one way to read into this. When I see that we have a bullish framework with some bearish indications here, it means I want to look at these time frames for some potential downside targets. Same would be true in reverse for some upside short targets. We'll get into that. Okay, if we're falling in momentum of several of the specific time frames, we want to be looking at that next time frame where we're bullish to say, where might we have a point of contact here, right? And we know that when we have like a red cap line or bears in control of our capital control line, right? It'd be so much better to just say money flow index. Bears are in charge of the money flow index. Everyone's, oh yes, you got that one, good. You get that, maybe I'll chart this into the equation. We have it on our Fusion. So, but when we're looking, and explore this, when we're looking at a bearish condition here, okay? And remember, always best if viewed on a big screen TV. If you're looking at a bearish sequence of time frames leading into a higher time frame, you're going to start looking at potentially a predictive of contact with this next level of consideration, let's say on that higher time frame that remains bullish. We'll get there. We'll continue to explore at what level, for instance, on the 15-minute, when we go red, meaning momentum's dropping. The bottom line, momentum is dropping. You see the momentum dropping. Meaning, for us on cap line, meaning what? Well, we're looking at contact with that 20 moving average at least. Red, dropping momentum here, meaning, you'll see the red background. Prepare for contact to the 20 moving average, okay? So if we can push into that next higher time frame, it can become relevant to the extent that we can front run, not contact with the 20 moving average per se, but contact with or expected contact with and that'll be the issue. Can we get it within a degree of high probability? The dropping momentum here, that red feature, that dropping momentum, contact with the 20, like 70+% of the time, guys. So if we can bootstrap a lower time frame into a dynamic on the higher time frame, yikes, yikes. That's going to be more exciting than the average trader is going to want to be willing to appreciate. So we will explore that. We will continue to delve into that as we continue to, guys, power into the markets. Did you want this preceding level of resistance? Did you want it? It has traded very slightly, huh? Painfully so, huh? It's a level of interest, preceding resistance, capitulation, target hit. We're going to close it out on Friday and say target hit. Congratulations. Now, what are you looking for? Increased volatility. You got it. Anytime you pause, you don't know where the market's going, seems like it's consolidating too long, there's just nothing really going, anytime that you just pause, you're like, what should I do right now? Well, every time that you pause and you don't know what to do in the market, Try and identify expanding volatility. Okay? Why? Because it's the most highly producing pattern in the market. So to the extent that you can identify such, and what else does it do? Well, you've got a pickup line here, okay? You've got a pickup line here on that 3 or 5 minute, okay? But what it also does is it really will get you involved in the volatility equation with a maximum expression along the level of support. So it's a value-driven consideration. If you wanted to know where the value was across a preceding level of resistance on Tesla, you're going to know, well, there's also value down here along this most extreme line of that specific volatility expression. Value driven. Get your eyes down here. The further you get your eyes down here, typically on longs, if you're a bull, the better off you're going to do, both on the micro and the macro. It is the saving grace of these patterns, right? He who chips away at the top gets hurt, gets not so kindly dealt with, correct? Yes. So let's keep an eye on the NASDAQ in the back. Let's notice that this pattern dynamic, the bottoming formation, tapped out at the 38.2 thus far with a rehit at preceding level of resistance. Bulls would like to hold this. What do you think? Yeah, bulls would like to hold this. Bulls would like to formulate double bottom framework. I hate to call this a cup and handle. We won't call it. We've had so many differentiated cups and handles. I try and make it in between the bottoming formations that we have with the upside target is the amplitudes. I try and bring that into focus, though relatively consistently is just the cupature with a potential for handle. So what we could be looking for as we just at least stroll towards next week on this Friday's at 254.76 breakout on Tesla. She's volatile enough she may just crank through it or to the crater below. We know that. Let's draw on a few levels of resistance. Let's take a look at, everyone's immediately saying bump and run, right? Potential lead in. We can scoop around to the outside here in terms of this equation, right? That is, oh, that's got some attention, doesn't it? What are you going to say about this, guys? Because it's a nice lead in, isn't it? What you're going to have to say, what we have to say about it is we must be prepared along a lower level of support in addition to what's going on right now. We'll also scope out the specific wedge potential here in line with that. It will be defined, and really the crux of the situation is going to be, you got it, head and shoulder, mid-level critical point, just call 254, 255, needing to be broken, with a parallel carry down. Go through your routine here, bam, bam. Not as aggressive as we'd like it situated a little bit more angled as such, wouldn't we? Just to note such. So we've got a breakout level for next week. We've got value considerations below. We've got all types of targets. And let me actually look at if we get into this zone again, oh, we're already into like the back end of the weekly. Understand that weekly on Tesla, the lower pro line on the weekly on Tesla. Yeah. Or the bottom side standard deviation band was big, but that lower pro line, big deal. You know this, lower pro line, big deal. As we start to operate below here, anything below this level, we're almost on the 20 moving average right now. If you look at this, that's the weekly 20 moving average. Watch this line here. I can't highlight that. There we go, I can. You see where we're at on that black dot? I don't know if I can do this. There we go. Pay attention on that black dot here. Okay? I don't do that. Come here. There we go, the black dot. Now look in the top left on the 3 minute or the 1 or 3 minute. Do you see we come into contact with that 20 moving average right here? Yeah? And what do we know about that area right there? Anytime that you in the market ever just really see price action that establishes itself as such, anytime that you see a move like this and a move up, you've got to be prepared for a move back down. You've just got to be prepared for a move back down. Anytime you see any kind of a structuring like this, you've got to be prepared for a move back to this preceding, really back to that level. We agree? We see this so frequently. So that is this is the specific 20 moving average dynamic exactly. Always be prepared for a move back on crossover to any 20 moving average as a pickup, reinforcement, or a failure of said crossover level. We agree? Agreed. I will talk to you all soon. It's been a pleasure to stream with you guys this week and trade. Way to trade. Huge week on NVIDIA, on Tesla, on Bitcoin. Remember, we just cover stocks to really go through our Bitcoin trades. It's what we do. It's what we enjoy doing. Bitcoin's the lightning in the pack. We've enjoyed the exposure to Tesla and to NVIDIA. And I want to encourage you to pay attention to the kind of master correlative here as we would look at, you got it, the NASDAQ. We're going to run through this again. In terms of this week, I know one thing. We hit that 23.6 perfectly. Congratulations, all the VIP. We nailed that level. This was the key focal for the week. Now, bulls need to hold this turf. Just need to hold this turf. Ideally, we personally want to see recovery and bam, up, out, and over with a bust of the head and shoulders, bust of the descending triangle, and just let's rock and roll it. Let the bad news cruise carry on with the recession talks. I'd love to see this rock and roll. Still prepared at that max probability 50%. Still prepared at the full 100%, and prepared in line with our preferred, there you go, our preferred macro NASDAQ patterning, which would be expanding volatility if we could get a pickup on this level of support or below. This is the pattern we want to trade, with the probability of a return to this level of resistance being the key dynamic in the market. This is London with Bitcoin Spike and VIP Trader. Nice to be trading with you this week. We'll talk to you all soon. Remind yourselves, nice short today amidst the price action on the upside on the 20, on the 4-hourly engaged on Tesla. NVIDIA caught the weekly. We did the weekly low on the green buy line. If you are not using Fire and Ice and you've got it in your arsenal as our VIP, come on, guys, come on. Sweet pickup. Nailed NVIDIA. We will talk to you soon. Take care of yourself and have a great, safe weekend. Can't wait to talk to you all soon. Take care. Bye-bye.